Hello, everyone, and thank you for being with us for this afternoon. We started many things this morning, and we will continue our discussion this afternoon. We usually say "feel the room," and I think that there are quite positive vibes actually coming from the room, and we will talk more about it. I'm happy now to invite my first guest of this afternoon. It's our first fireside chat, well, let's call it a tea side chat, as we're in Morocco. Mrs. Florisel Leiser, President and CEO of the Corporate Council on Africa, please. So we will be having those fireside chat to understand more from our distinguished guests, and I'm happy to start with you. Maybe let's introduce to our audience the Corporate Council on Africa that aims to develop trade and investment between the US and Africa.
So Aziza, thank you very much. I'm pleased to be here. Thank you to Mr. Amran and his team at Ithmar Capital. It's a pleasure to join all of you for this very important conversation. So, Corporate Council on Africa is a business association in the U.S. that has been focused since 1993 on promoting U.S.-Africa trade and investment and commercial engagement. And we have the privilege of having more than 100 members who are both U.S. and African, multinationals, mid-caps, and SMEs. And they are invested in Africa's most promising sectors: energy, infrastructure, health, security. And so we are agribusiness. I shouldn't leave that one out. And so we're pleased to have them as members. We organize ways that they can connect with all of the leading people, both in the U.S. and government, as well as leaders on the continent, to promote those ties and the collaboration that's needed to really advance U.S.-Africa trade and investment. We're not doing enough. We are here. There are many U.S. businesses and investors on the continent. People say, Flory, where are the Americans? They are here, and we have companies that are members of CCA that have been here for 50 years, 70 years, et cetera. But it's really important that we not use what we've done thus far. We really need to take it to the next level. One of the things we'll be doing soon is, thankfully, with the support of the government of the Kingdom of Morocco, we'll be hosting the U.S.-Africa Business Summit in Marrakesh on July 19th to the 22nd, so just in another maybe 3 weeks or so. And we're bringing to that not only businesses from the U.S. and Africa, but we'll have African heads of state. We already have heads of state from Ghana, Botswana, and Mozambique that will be here. We think that there will be others. And we're bringing from the U.S. government the head of our U.S. Export-Import Bank, leadership from the Development Finance Corporation, the head of the U.S. Trade and Development Agency, the head of our Millennium Challenge Corporation, and we're also partnering with Africa 50, who's having their major meeting just before to make sure that we focus on infrastructure investment. So we're really pleased. We hope all of you will come and join us there as well and keep the momentum going from this important discussion you're having here at the ASIF, your launch of ASIF.
You've been talking about the ties between the U.S. and Africa, and I think that the major challenge here for all the countries actually and international investors is how to strengthen those ties. And I would like to ask you, coming from your point of view, your experience and the knowledge of the African continent, does Africa today appear as a very attractive investment destination for the U.S. investors, for example?
So, so the story is one that, looking backwards and then looking forward. 54 countries on the continent, all of you know this, many of them are small, the markets are small. And many of the US companies, even the ones that have been here on the continent, trying to deal with so many economies at the same time, trying to focus on where they would invest, it's been difficult. But I think that the game changer really is the launch of the African Continental Free Trade Area. AFCFTA is major, not only because of what it will do amongst Africans in terms of trading more with each other. Someone mentioned this morning only 17% of their trade, but also in putting in place the kinds of economic reforms, the regulatory environment that's needed to actually incentivize people to come into the market. It'll be the largest free trade area in the world. And so I think that this is a good point to look at Africa. I think there are also some things that are unique to Africa. I just want to mention two as to why we're telling US investors that they need to be here. One of them is unique in the sense that Africa has, 60% of the world's arable land. We all know that there are major food security issues right now, exacerbated by the Russia-Ukraine situation. But only 80% of the arable land is actually being utilized and developed. So that's a major opportunity and a major reason why companies should be here and pushing capital and into that sector. The other thing that's unique about Africa, there are many, but the other one I'd like to mention is that there are strategic minerals that are here. Cobalt and phosphate and others that really can play a difference in Africa being able to address some of the supply chain issues we had, production of semiconductors, being able to contribute to the development of the electric vehicle market, which obviously is huge and will be, even bigger. And also in green energy, renewables. This is something that I think these opportunities are sort of unique in terms of Africa. And amongst many reasons why we're telling our member companies as well as investors that they need to come and they need to look at Africa.
Africa clearly, as we heard it during the whole morning session, is an investment landscape that is evolving very fast. From your experience, can you spot some major things that changed, evolved during the last decade, for example?
So, as many of you also know, Africa's had a major economic growth spurt. We see it in the infrastructure that's developing. I've been coming to the continent for 25 years, all over, and every country that I visit, you see roads that are being built. You see a construction of buildings, even new cities that are being developed. Ports, airports. I know many of you have come through the airports, but it's not just the physical infrastructure, but it's also the connectivity that we see. I remember years ago, you would have to go through Europe and come to an African country, go back to Europe to get to another African country. And I think that what we're seeing now is a lot more connectivity. We're also seeing advances in technologies. This is very important, I think, across the continent. Digitalization is really, occurring rapidly. So yes, I think that, we can look at things that are happening on the continent, physical development, but also things that are happening in terms of how Africa operates and the ways that we can then engage, we being businesses, commercial entities can engage on the continent.
You've talked about Ukraine, and of course we're getting slowly out of the pandemic also. So Africa and actually all the world is facing a lot of challenges today, and maybe that makes it a little bit more important for the continent to have a private financing-driven development that will help for raise more growth in Africa. How do you think we can achieve that?
So I think that the key will be looking at some of the challenges that we've had, the COVID-19 pandemic and what's happened there, and also the Ukraine war, and trying to see how we can turn those into opportunities. You know, right now we know that it's estimated that for Africa to meet the UN SDGs, Sustainable Development Goals, they will need about $700 billion per year for a while. But then when you look at, for example, we're looking at working more closely with institutional investors. They have about $100 trillion globally. About 45% of that are U.S. institutional investors. So we are, at CCA, are very focused on addressing a couple things. One is the perception of risk, and then the other is working to bring people together to actually address the real risk, because there are real risks in Africa. And how do you mitigate those risks? And I think that it's collaboration between government and private sector. I think it's collaboration between U.S. and African entities and partners. That's very important. And so, you know, we're very focused on that aspect of how do you look at these challenges and turn them into opportunities? How do you address some of the key issues that are on the continent that prevent sovereign wealth funds, as the ones here, as well as institutional investors to come to Africa? What are those key things, the 5 things, or less, hopefully, as Commissioner Musanga said, that need to be addressed? And I heard yesterday as I was talking to different people, governance is really critical. And you know, being able to have ASIF address that collectively, collaboratively, I think will be important in pushing the revenue and the private capital into Africa that it needs.
You said that CCA is working to further strengthen the ties between U.S. and Africa in terms of investment. You also talked about the things that you already saying to the investors to tell them why they should invest in Africa, but what can still be done? If you had to spot just a few things that still can be improved so that they attract actually American investors, but international investors as well.
So I think for the U.S., I can't speak for other parts of the world, but for the U.S., we have 2 sides of the coin. First, we have to highlight what the opportunities in Africa are. We need to help American companies and investors understand, you know, Africa is not monolithic. There are 54 countries. They're not all the same. There are some common issues across the continent and some common opportunities, but they're not all the same. And so one of the things that we're trying to do is to educate the American investor. But I think more than just, you know, talking about it, I think that you have to also address the other side of the coin, which are you know, making sure that we work collaboratively with the Africans to increase to improve the regulatory environment, the legal environment, to improve transparency, to push resources into the justice system here, so that if there are issues between investors, that they can be addressed quickly. People need to know that the money that they put into the continent is secure, that they can get their funds into and out of Africa as quickly as they need to, and to have the kinds of mechanisms that allow them the comfort that their resources and those of the people they represent, their stockholders, shareholders, is safe on the continent. And so I think that anything we can do to improve that, and I just think that this forum, it was very powerful to see all of the heads of sovereign funds here together. I think that's, a message that they are looking at Africa in a particular way. They've been here a long time, many of them, but there's more that they can do. And so I think for us at CCA, we're very focused on how we can be a part of that dialogue, how we can work with the African Union, with African governments, and with the private sector, both in the US and on the African side, to address the issues.
We only have a few seconds left, but I would like to ask you, actually, because you've been talking about the African sovereign funds, what role they can play in this process today?
Well, I think the African sovereign funds have the role of promoting others who can invest in Africa. If you see that they're coming in, if they're able to work with the African governments to promote the kinds of reforms that are needed to give a sense of confidence to investors, so them as well as others, then they can basically incentivize private investment into the continent as well, because private capital absolutely is going to have to drive this. Governments alone cannot do it, and the sovereign funds, I think, are at the forefront of being able to promote that confidence in Africa and to get the reforms that are needed.
Thank you very much. Thank you so much. Floris Eliza, President and CEO of the Corporate Council on Africa. Thank you so much.
Thank you, Aziza.
Thank you. Thank you. So just before going, thank you so much. Before going to the next sequence, I just would like to add something. There's a correction on your invitations. You've been told that the dinner was tomorrow. Actually, it's going to be tonight. So I'm going to remind you of it. That's very good, very good news to have. So thank you so much. And time to call to the stage Mr. Wilmot Allen, CEO of VLA Capital Advisors, and his guests for our first panel that is entitled Untapped Potential versus Challenges, Promising Opportunities to Seize. The floor is yours. Thank you.
Good afternoon. Very pleased to be with you today at this historic event, and congratulations to Ithmar Capital and all the stakeholders of ASIF. I was sharing with some of the colleagues last night at the reception that, to my knowledge, there has been no other region that's come together in this way for mutual collaboration anywhere in the world. So I think that is great news, that's a great opportunity, and we should congratulate ourselves. We're here today to talk about untapped potential and challenges for sovereign wealth funds. I'm Wilmot Allen, CEO of VLA Capital Advisors, which is a transaction advisory firm. I'm very pleased to be joined by our august panel of practitioners and experts. Mr. Slim Feriana, who is the CEO of FSD, Papa Demba Diallo, CEO of FONSIS. Idem Adzagune, who's the co-chair of the Afro Champions Initiative. And today we will go through this in panel format. We have heard, I think, a lot of great information on trends and developments for sovereign wealth funds. And as we think about the paradox between potential and challenges, I wanted to set the table, gentlemen, by just mentioning a few of these and then asking you to introduce yourselves. And I'm going to pose one question to each of you in the first round, and then we'll have a second round, and if time permits, a third round. The contradiction, the paradox of opportunities and challenges. We have heard a lot today about the Africa Free Trade Continental Agreement and how that is facilitating greater intra-Africa trade. We also understand that this is happening in the context of a global pandemic, and so that there are more opportunities now to promote inter-Africa trade, but at the same time, the challenges of how to overcome some of the setbacks for corporates, for SMEs, even for some of the regulatory framework that now has to shift in different countries to accommodate some of the slowdown in the economies. There is now more visibility on investment into oil and to other natural resources, but yet we also see that in the context of a war, Russia's war with the Ukraine, that oil prices are rising and that there are stresses on food and other aspects of the economy now that sovereign wealth funds in Africa are even impacted by. The good news is that there's more investment by venture capital providers and private equity investors, so that there are more co-investment partners. But at the same time, it also will have implications for the pricing on deals. There's now greater visibility on innovation across the continent. As everyone in this room knows, most of the innovation now spotlight is focused on technology, which has been aided and abetted by the ascendancy of African unicorns, particularly in fintech. But that also suggests that there's more of a need and a greater pressure now for investment into the real economy. And I believe that's where sovereign wealth funds can play even a greater role. There are more private-public partnership partners in blended finance projects now, where debt and sophisticated financial engineering with guarantees and other products are making it easier to invest in PPE. But at the same time, we understand that in the African context, there's an increase in heightened debt burden that will have to be dealt with, where sovereign wealth funds can play a role in alleviating some of the pressure from debt. Impact investing, and all of us are now having to come to terms with impact in terms of sustainability and ESG, is now considered by some investors as an asset class in and of itself, and at least a very serious investment strategy. But as we've heard, that also suggests that there is a greater need for ESG regulatory policy to be put in place. More greenfield opportunities exist for sovereign wealth funds to take on, to invest in, but the need is still there for brownfield, and as there is still an elusive quest for greater liquidity on the continent, the investment in brownfield takes greater precedence. There's improved governance and transparency among sovereign wealth funds, but that also means that the expectations for greater transparency will increase. So gentlemen, we now turn to you. We're going to begin with the FSD. And with you, Dr. Slim, please introduce yourself and talk to us a little bit about the investment mandate of Djibouti and the FSD, and how you are seeing the fund contribute to the economic development of the country.
Thank you very much. I think once again, thank you to Obaid and to Ithmar Capital and the whole team for Rabat and Morocco. Great pleasure. Thank you for hosting us at such world-class event, much better than Zoom. This is the best event in a couple of years. So delighted to be here with humans, human energy, positive energy. Right, so going back to, I'm Slim Feriani. I'm the CEO of Fonds Souverain de Djibouti, FSD. Now, FSD was established about 2 years ago in 2020 by His Excellency the President of Djibouti, Mr. Ismail Omar Guelleh. I've already said this morning, quite a leader, quite a visionary. And it was created by his Vision 2035. So we have Lionel Zinsou here who mentioned it this morning already. So it was teamwork. Again, l'union fait la force to have it seen happen. It was like a baby, effectively. And FSD was created as a key driver of Djibouti's Vision 2035. It was created with a multi-dimensional, impactful mandate focused on investing nationally, regionally, and internationally. Effectively, up to 60% of our portfolio could be invested internationally. Of course, Djibouti first, and then the region, Eastern Africa, Africa, but then internationally, as other sovereign wealth funds have done it over the years and over the decades. So the aim, going back to the multidimensional aspect of it, is to catalyze sustainable and inclusive economic growth for the diversification of Djibouti's economy, the creation of jobs, definitely, and reserves for future generations. And of course, when we talk about the creation of reserves, so we talk about returns on investments. So it's not a charity. We're talking about dollar returns over the years, risk-adjusted returns. Further strengthening corporate governance is a key enabler to successfully partner with domestic and foreign private sector participants, as well as other sovereign wealth funds and DFIs to ultimately achieve our mission. For us, improving corporate governance starts with our own existing portfolio of SOEs that were allocated to us 2 years ago, including the national telecom champion, Djibouti Telecom, which has access to 9 subsea cables, and that's a hidden asset we should be talking about at one point. I'm the chairman of the board of Djibouti Telecom also. GHIH is the other holding, Great Horn Investment Holdings. It's a big holding of 27 companies with most of the port activities, Air Djibouti, etc., etc. I'm on the board of that one. And the third holding is EDD, Électricité Djibouti, the national champion of energy. The combined book value at the time, historical, is roughly a third of the GDP of Djibouti. Now, the idea is to build on our existing strengths and competitive advantages. We can't be the best at everything, so we need to focus on what can we be best at. So we are very good at ports activities and infrastructure that's been built over the decades. We have a great strategic geographical location right next to Ethiopia. Ethiopia is our main trading partner. So those couple of things already give us a good head start in terms of building on strong foundations. We are, as a sovereign wealth fund, a source of co-investment opportunities. Delighted to be to see with us friends of Africa, GCC sovereign wealth funds or BPI, etc. So we are a source of co-investment opportunities. We take minority stakes, so we aim for 25% stakes, and then we'd like to partner up with typically strategic investors who are developers or operators in whatever the sector is, so that they bring the know-how and the technology as well as the capital. FDI was the game changer for the development of countries like China. Well, it's no surprise that it has to be the same for Africa. This is the time to attract FDI in scale, and we play our part, obviously, for Djibouti. And in anything we do, last but not least, we take into consideration ESG. Environmental, social, and governance issues have got to be part of the equation we work with. There we go. So that would be a good start, I hope.
Excellent start. How about one example of a project that you're excited about that is a demonstration effect for economic development?
One example. That's
Just
very
one.
difficult. I have so many.
Just one. Just one.
Well, at this stage, we're working on a renewable energy project and hopefully a data center. I can't say just one, because data centers is a big thing for us to develop, given the 9 subsea cables, the latest one being the Facebook cable, as they call it. It's called To Africa. It's 45,000 kilometers. It's the longest subsea cable. I've touched it. Delighted to have been part of history. So data centers is a big thing for us to be a hub for data centers, and everyone is welcome to join us in building this. Thank you.
Thank you. So, Papa, on to you. Before you speak, I just wanted to say one of the things that's great in the tone of celebration is that we have seen the number of African sovereign wealth funds rise over the last several years. Most, obviously, are less than a decade old. FONSIS fits in that category, and there's greater diversification regionally. And so we're shifting now from the Horn of Africa to West Africa. Tell us more about FONSIS, and the question for you would be, most people in the room, I think, are familiar with FONSIS. You have an excellent reputation, but specifically around the intergenerational fund, if you could talk about that and what you think how you think that bodes for the future of sovereign wealth funds and their economic impact in Africa.
Thank you. Once again, bravo, Obeid, et à toute l'équipe de ITMAR pour cette organisation. And also, congratulations to all the African Sovereign Wealth Fund for being able to reach to this milestone of less than 3 years and giving the COVID period. So we have been able to set up this forum in less than 3 years. So this is a good milestone. So FONSIS, we are a development fund. We talk about sovereign wealth fund. People know about saving funds, stabilization fund. We are a development fund, and we have been created by law in 2012, and we started our operation in 2014. And the idea for FONSIS is really to, as an all development fund, to attract investment, to try to invest in impactful projects. For me, ESG is not a way to invest, it's an objective. And being profitable is the way to assure the sustainability and the continuity of the business. So we have to take that way around as a development fund. So we are investing mainly in the main sector, agribusiness, health and pharma, water energy, transportation, and then what we call finance and investment vehicle, funds and investment vehicle. And what we do is like in the other fund, we develop projects, we co-invest in a minority position, and then we do turnarounds. So turnarounds are very important in our country because we have many companies, ailing companies. So as a sovereign wealth fund, we have to work with the government to be able to turn around those companies and sort of letting them die. So this is and there are 3 things that are important for us: ESG, women empowerment, and technology. Those are for us cross-cutting teams that are present in all our investment decisions. We don't take digital or technology as a sector. For us, technology is to have to be pervasive. It has to be everywhere, so we have to take technology everywhere when we are investing and have to digitalize all our sector. We do PPP, and as we develop projects, and also in our mission, is really to develop the ecosystem of equity investment and also the ecosystem of savings. So it is larger than just investing, but the purpose is really to build the ecosystem of those areas, equity investment and then saving. Now we are moving from a development fund to a saving fund with the intergenerational fund. And the law has been voted by the Parliament of Senegal in April or May, where 10% of the proceeds of oil and gas in Senegal will be allocated to the generation fund. And this generation fund will have to invest in, like other fund, for the future generation. But here the difference is that, as I said, if you save money for the future generation and you don't educate them, you don't build the environment that they need, when they will receive the money, they will do nothing with the money. So even in terms of investment strategy, we have to get experience from other African funds and build investment strategy that are really specific to our context, and make sure that we do not only invest in fixed income, those usual investment vehicles that saving funds are using. So FONSIS will be managing this fund and also be managing the strategic fund. What I would say is that we act more on our fund-of-fund activities, because we say that the fund-of-fund activities will be the way to reach the SMEs, to reach some sectors, and also to bring in capital, but also to bring in some specific knowledge when we are talking about health or technology or some other technical sectors.
Thank you. We have also with us a gentleman who is really mobilizing the private sector to engage potentially as co-investors with sovereign wealth funds. Adam, we'd love to hear more about your work with Afro Champions. I know I've known you for several years now, but I also have discerned that Afro Champions like to work kind of under the radar. So today we want to kind of expose the work that you've been doing across the continent with a particular angle on how you see the contribution of the private sector to Africa's development in partnership with sovereign wealth funds.
No, thank you very much, Wilma. And my name again is Edem Ajogeno. I'm co-chair of Afro Champions. We are not under the radar because our job is just basically to flash the lights on the existing champions who exist on the continent but are kind of siloed and fragmented. And we try to be the widget that sort of connects them around projects that scale, and also bring in the public sector and the Pan-African institutions that have the power, legitimacy, so that we can take more of a project approach to driving the integration that the continent has. So Afro Champions is a private sector-led multi-stakeholder organization with partnerships with some of the DFIs, some of the sovereign wealth funds, private sector champions, SMEs, but with a specific focus on integration. As it relates to the private sector's ability to sort of finance, or if you like, mobilize capital and partnerships with sovereign wealth funds, I think it's important to maybe share some statistic on the capacity of the private sector on the continent. I mean, 90% of actual total production on this continent comes from the private sector. 2/3 of total investments is from the private sector. 3/4 of lending that goes into within the economy of most African countries or African countries is also from the private sector. Now, if you add that to the fact that 90% of people with jobs, I mean, within the productive capacity working group, working age group, are also from the private sector. 90% of businesses generated from that sector, of which SMEs really occupy most of that, translating into 63% of jobs all over the continent, and 50%, I mean 50 billion GDP contribution to the GDP. It stands to reason that the private sector has the capacity to do much, is doing much. The challenge, though, has been that the private sector's investments are not going into project preparations. They're not going into sort of incubating bankable projects and deals. And we've seen such a massive decline in the kind of private sector investments that have been going into infrastructure, for example, way back from $15 billion way back in 2013 to now about $5 billion by 2019. So it's clear that there's potential for the private sector to do much. Where we think there's the investments need to be channeled is really into this paucity that has been created by a lot of investments going into, if you like, brownfields, I've heard it called, or in other sectors, what do you call them? The downstream, as opposed to upstream and midstream, where a lot of those investments can be attracted, particularly because there's bankable deals, flow of deals that exist, and also projects, structuring of projects. And I think that if we can, through fora of this nature and partnerships of this nature, begin to get the private sector who we all agree, because if I look at the sovereign wealth, or sovereign wealth that exists in the sovereign space, it's pretty finite. I mean, it's market forces have made it possible, free market has made it possible for a lot of the wealth that exists in the world today to be in private capital. That capital is not coming to where Africa is longing opportunities. And we all know the reasons why. But what we are encouraging through some of the work that Afro Champions is doing, even with some of the sovereign funds, is to begin to look at how we can incubate private investments, particularly with sovereigns, into projects, because that's where really the wealth is. The wealth is in the private sector. And it's that innovation around where we direct that wealth to creating maximum amount of deal flows that are bankable, that will attract the kind of resources that exist in the private sector. Thank you.
Thank you. Slim, we're going to come back to you. You have a particular perspective on the challenges that ports face. I also have a question for you around the themes of your investment strategy, but I think you've covered that in your intro. Can you talk a little bit about that? Because I think that has strong implications for infrastructure investments. From your vantage point, in terms of strategies to sort of address some of the challenges that you now see when it comes to supply chain and the movement of goods through ports, and any sort of thinking that you're doing strategically to help, at least in the Horn of Africa and East Africa, to alleviate some of that burden.
That's away from the script. Anyways, I'll have to go back and handle this one, improvise. I'll talk about ports in the sense that it's a key existing sector for us, but we need to diversify in terms of not putting all eggs in one basket. As we speak, Djibouti's economy depends heavily on the ports activities and the shipping activities, and that's primarily because that route between Asia and the Suez Canal and then off to the Mediterranean is about a third of global trade. Mm-hmm. Now, our strategic location allowed us to take advantage of that, so we have well-known, world-renowned now ports activity, which, therefore, going back, we need to now build other things in terms of the logistics, so all the roads, airports, railways, all together is what we need now in terms of as an economy, but as a region also. So going into the integration, intra-regional integration, intra-African integration, this is a key thing in terms of having the logistics. So we are very well positioned, and that's why we are building on that. And that brings me back to the question of themes that we have to build on sectors. And from my perspective, our perspective, the sky is the limit as to what we can do out of Djibouti. The inspiration was really Temasek of Singapore. So the inspiration for Djibouti's sovereign fund was Temasek, because back then, about 45 years ago or so, they've started with Singtel, Singapore Telecom, and then the rest is history, as we say today, Temasek, and you have GIC. So we have designed the sovereign wealth fund of Djibouti a bit along those lines, but to be also quite unique in our way of thinking and our way of doing things. So we have Djibouti Telecom, we have all the other things that we are looking at in terms of sectors. So as I said, the sky is the limit, and that's why I invite you to visit. Because I've mentioned it already in the morning, there's a huge gap between perception and reality. Perception, if I asked many people around the room, what do you know about Djibouti, they probably don't know that much because they just haven't been there. Now, once you go there, you kick the tires and you go on the ground, then the reaction we get from a lot of people that visit, including the latest one, it was mentioned by the gentleman from QIA earlier, Casada Capital Management. It's now the biggest, really, game in town in Africa in terms of the hospitality sector. $500 million in equity, 1.5 billion firepower, a JV between QIA, Qatar Investment Authority, and Accor, which has 40 brands of hotels. So they visited. They didn't have much in terms of expectations, but when they leave, the Casadas of this world and others, without naming them, I think we are delighted to see how we have been able to close that gap between perception and reality, and what can be done in Djibouti in terms of sectors. So yes, tourism is a major sector we are working on. All the connectivity is crucial. I mean, connectivity, of course, with the subsea cables, but airports, yes, we need to, I mean, we're delighted to have Ethiopian Airlines is quite a big player in the region, and, credits to them, really hats off in terms of what they've done. RAM, Wailar Maroc, is on the western side, so there's something to be done in terms of both of them doing something to connect better Africa, I think, generally speaking. And, we're working on the financial services, things like crowdfunding, leasing, because today it's mainly the banks. Healthcare, agribusiness was mentioned earlier. That's a big one also for us. Infrastructure, but last but not least, education. It's really the cross-thematic underlying opportunity. I mean, the way to put it is we need to train talents that will excel and build careers in and become the leaders of all the sectors that I've just mentioned. So it goes down to the basics is education and training, and that's something I think that's common to all of the African countries. And this is I've talked about Djibouti, but this is common to all of Africa: education, healthcare, infrastructure, human capital. Effectively, I mean, financial capital is nice and great, but there's lots of it actually globally. Maybe not enough in Africa. And it's a numbers game. So I'd like to just end this by saying we are, as I said earlier, we are witnessing an unprecedented demographic boom. 300 million people every decade being added to Africa's population. Opportunities and challenges. So the opportunities for us, going back to Djibouti, where we have about 400 people right next door, effectively, and that's a big market. So the way to look at Djibouti, yes, small is beautiful, and nice things come in small packages like diamonds, but 1 million is not enough probably for a market to justify an existence of manufacturing hub. However, when we say there are 400 million nearby, we have 120 million in Ethiopia, right? Not 100, because everyone keeps talking about the 100. That's 10 years ago. So people are still talking about the decade-old numbers, just like for Africa. It's 1.4 billion, not 1 billion. So again, it's very exciting. I mean, the upside is phenomenal. You have an open invitation to visit us. I can't believe you're in Nairobi. You're gonna have to come.
I will.
And I can, as I told you, Air Djibouti, which is part of our holding, will be having direct connections to Nairobi and to Jeddah. So we're also expanding in terms of connectivity. We're complementing the work of Ethiopian Airlines and others. So I'll just probably stop there in terms of what I wanted to convey in terms of messages, and deviating a bit from your question. But we have a few minutes of airtime, and this is the airtime I wanted to have. Thank
No
you.
problem. Papa, coming back to you, one of the things we've observed is that during the pandemic, and surely we're not totally out of it yet, is that governments have had to be a little bit more nimble and responsive because of the crisis. And many observers have seen, and I agree, that sovereign wealth funds have been, in terms of government responses, really flexible when it comes to shifting strategy, maybe in sectors in other ways. I was wondering if you could talk about the impact of COVID and the pandemic on your investment strategy, and how you've thought about that in relationship to being a steward of public funds and your obligations to the people of Senegal.
Thank you. I forgot to mention one thing, is that for the Generation Fund, we are going to receive 100 million USD per year. So when you talk about oil and gas, people think about big numbers. And I used to say, fortunately, in Senegal, we have oil and gas, but we don't have too much. So we just have enough to support the investment, and that is deriving from a creative process. We have to be creative in Africa. If we follow the same process than the other continent, then we'll miss something. Just allow me to divert. I'm coming, before joining Fonsis, I was in a company, telecommunication company, the main telecommunication company in Senegal. They started investing in fiber optic in the 90s, in the early 90s, 91, 92. So putting fiber optic between Senegal and Mali, putting fiber optic around Senegal. And those allowed them to be the hub of telephony, and this is where they took their cash. And they were able to invest in Mali, to be the first company in Mali, Orange Mali, in Guinea, in Sierra Leone, in Bissau. So thinking out of the box is really important. Fonsis, the pandemic actually validated our strategy, because health was one of our main sector, health and pharmaceutical. So our first investment was in health sector. And it was a PPP that we did with a public hospital, and we were trying to demonstrate how we can attract private capital into public hospital. How can we do that? So Fonsis has a strategic sovereign wealth fund. We see that it is our role to find a business model that is working. So we invested into what we call a center providing digital imagery. And with 100% risk. And our second investment or third investment, our second investment was in a solar plant, so green. Our third investment was in pharmaceutical. So it was in a company doing IV solution, intravenous solution. So, and when the pandemic hit, we were building an hospital in the second biggest agglomeration of Senegal. And what we did is that we had a company working on only building medical infrastructure, health infra. So we changed the hospital we were building to a treatment facility for COVID. And the company that we invest in for IV solution started, we expedite the development and the building, and it started producing IV solution for the pandemic. At that time, we had all the logistic nightmare. You were able to import nothing. Nothing was working. So we were lucky in Senegal to have this company operating. And I can say something, I am lucky. If this company was not there, I don't think that I will be there with you. Because I have been treated using the IV solution of that company. So when I first saw it, I spent my time, I was so excited that the medical staff was saying, this guy is healed or not? I was very excited, and I was taking photo of the IV solution, sending message saying to the guys, this is working and this is treating people who are ill. So this is one thing, this is important in the health sector, because at the beginning, when we were talking about health, in all the meetings, people will talk about infra. You say health, they say, oh, no. This was before the pandemic. Now, every bank, every investment entity is talking about health. But at that time, we say health is important because we have a huge growth of our population. And if you have a growth of population, each country you have 2 feet, education and health. If those 2 systems are broken, then you have an issue. And in Africa, we have a nation that we have to build. So as a sovereign wealth fund, we have to ensure that the health sector is very critical to our stability. That's why we thought out of the box and we say, health is our first sector in which we have to invest. And we have to invest in 2 different ways. We have to invest in the infra. We have to invest in PPPs type, build, own, and transfer. Build, own, rent, and transfer, if you can say so. Mm-hmm. You can have a pure PPP where you have the risk of the activity. And also pharmaceutical, how we can develop the sovereignty in pharmaceutical. Not sovereignty, because no country can be sovereign in pharmaceutical. But how can we be sovereign in an area where we can still exchange? Because while everything was closed during the pandemic, we were able in Africa to travel. We were not hit as hard as other continent. So for us, we have to think as a continent, say, okay, tomorrow, is everything stopped? We should be able, between ourselves, to continue working and doing our activities. So the pandemic validated our strategy in the sector that we chose. But the pandemic also made us know that we have to reinforce partnership, that we have to act to go more, to act quicker, to develop projects in less years than what used to be done. So to do so, you have to have partnership. And we say that we have to develop our fund-of-fund activities. So we have to develop vehicles in sectors, in agri-sector, in health sector, so that they will be more efficient. Efficiency is also very key. And when you're a generalist, you cannot be so efficient. And if you want to build some specific vehicle for investment in sectors, you have to develop partnership. Partnership to bring in money, and partnership also to bring the knowledge, so people can bring their sector knowledge and help you do what you have to do. And what also we learn about the pandemic is that in term of investment, we have to find a way to lever or to attract the local possibilities we have in terms of saving, in terms of investment. When I say local, I mean regional, continental. This is really important because when the flow of investment stops because of the pandemic, then we are in trouble. So when I say activity, for me it is regular sector activities, but also the investment activities. So people who are local, they will be more, they continue more to be involved into the investment activities, governance of companies, and also keeping the project going on. Because in 2 years, each country, any African country will have its population grow by 5 or 6%. So 2 years is 6% more need or 10% more need. So you cannot stop doing things.
Thank you. We also have tracked the fact that sovereign wealth funds, many of them have had to withdraw funds to address COVID. I think the total is about 1.5 billion in aggregate. Funds like FSDA, who's here, and the Pula Fund, I think, have been very focused in making sure that they address COVID within their economies as well. So that's really great news to hear. But on the other side, Adam, we have companies that have had to be agile, that have had to be innovative, and have had to kind of pivot. So moving from the funder side to the investee company side, from your observation, what are some examples of those types of companies and how have they done it? Any thoughts that you have that would be lessons learned for other people to think about portfolio companies that they may have to manage?
Well, thank you, Wilma. And just feeding from what Papa said, the way Afro Champions approached the pandemic was to look at it more from an opportunity than a challenge. And it went back to some of the things Papa talked about, which is partnerships. And we had to look for very strategic partnerships. As a strategic partner to the African Union and a technical partner, we recognized that there were a lot of things we needed to address in the pandemic, for example, that no matter how much wealth private sector had, they just couldn't influence it or impact it. How vaccine manufacturing, procurement, all of these things were really, really things that only private public sector could negotiate, could do, and could even procure. How people move across borders were all being impacted by decisions that were made by public health institutions, among others. And then when you came into the real investments, in terms of private sector was really, really willing to help in some of these things. The capacity was there, but the coordination with the public sector was a challenge. And then there were things that the public sector had the legitimacy to do, they just didn't have the connection with the private sector. So we saw that as a massive opportunity because of the unique relationship we had with governments, Pan-African institutions, but also the private sector. And I can give one classic example of an opportunity that we're able to take advantage of. I mean, of course, we saw how borders were closed, free movement of people were hampered. This affected, CFTA's movement of people. But by just being able to bring a number of startups, for example, together in the area of digital technology, by taking advantage of the digital natives, by being able to get Africa Union and Africa CDC to become a partner, because they are the only ones who have the legitimacy to harmonize, and create the kind of platforms that will and aggregate platforms across continents. We were, in a matter of a year, were able to interconnect all of the, about 24 labs in 24 countries on one digital platform. We're able to interconnect vaccine repositories. We're also able to interconnect Port Health, all under one digital platform. And now we've been able to move beyond that. We created what we're calling PanaBios, which is not really just one private sector institution, but a series of private sector institutions bringing their capacity, some in the digital space, some in the technology space. And now, thanks to the collaboration with the African Union, we've been able to now interconnect to India, UK, EU, and interoperable with Australia. Africa now has been able to create a technology that has become part of the global biosecurity infrastructure, which sadly would not have been available if it was just public institutions trying to do this or private sector institutions trying to do it. So for me, that's a very practical example of a partnership that has created scale. I mean, we haven't made noise about it because it's an ongoing and evolving project. But India now is connecting its whole digital health infrastructure to this platform to make it easy for people moving across the country. What it's done basically is it's created that digital public good, on top of which now we can create that marketplace for more and more people to innovate on top of. So that's one practical example of something that came out of the pandemic. The same thing we've done in the area of health, we're doing also in the area of trade. Again, by identifying the strategic partners, CFTA Secretariat as an example, bringing digital narratives, beginning to aggregate existing digital platforms in countries, but finding the legitimate institution that has the mandate to do that. For customs harmonization, for regulatory, bringing them on one collaborative platform to make it easy for people to be able to move goods across the border. So I think COVID, more than anything else, pandemic is actually giving us the ability to be more entrepreneurial, because people just think of entrepreneurship within the private sector. But public sector also had to now begin to entrepreneur itself around how we go around some of these obstacles. And this is thanks to the pandemic. Thank you.
One of the things I'll just say briefly, just to piggyback on what you said and what I know about your work, has been in healthcare, which has been a common theme, which is obviously topical because of the current situation. But I know that you were very much, Afro Champions were very much instrumental in the support of Africa CDC. We have the commissioner here from the Africa Union, and laying the foundation for work that would be public-private partnership in different countries to strengthen healthcare systems where there may be an opportunity for sovereign wealth funds to come in at a later stage, maybe to co-invest. So I just wanted to highlight that as well as commend you for that work. As we think about longer-term strategies, I think we've set the expectation here today that Pan-African investment, Pan-African collaboration is really the opportunity and challenge ahead. And the good news is that it's already happening, and it's been happening for a while. I just want to read a few examples that involve many of the stakeholders in the room, beginning with Slim here. And I hope I have my facts correct. Please let me know, and I know you will, if they are not. But in 2021, the FSDU signed an MOU with the Eastern Sovereign Africa Trade and Development Bank to foster greater cooperation in selected economic sectors, both in Djibouti as well as TDB member countries. So just want to highlight that, unless you really have something you want to say.
I can't contradict you. So.
Okay, all right, great. Okay. We also have the FSDA from Angola, which has established a venture capital firm, a fund worth about $500 million. And I've talked to some of the stakeholders there about that, with the aim of investing in tourism and hospitality industries in Angola, but also in other sub-Saharan countries, sub-Saharan African countries. Ithmar Capital has partnered with the World Bank to establish the Green Growth Infrastructure Facility, which is a Pan-African focused fund on green investment throughout the continent, as the name would imply. NSIA, Uche has been very active with the CDC group, forging a strategic partnership for knowledge sharing and exploring investment opportunities, signed an agreement with the OCP of Morocco and other stakeholders to develop a 1.4 billion plant to produce ammonia and diammonium phosphate under its gas industrialization strategy. So these are many of the great things that are happening, and I know that Ithmar and NSIA have actually partnered to build a Trans-African gas pipeline project as well. So collaboration is happening. Hopefully this is the catalyst and the motivation to do more of that. But I do think that we need to acknowledge the progress that has been made. Slim, I am going to come back to you. Just having that in view, long-term development strategy. You have a new fund, but the pressure is on you now to not only to deliver results in the short term, medium term, but long term, and to have your fund appreciate in value. Any comments there on long-term development strategy that you're thinking about?
Thank you, Wilmot. And look, what you've mentioned are great examples. They are tangible examples, and that's without ASIF. So imagine now with what we're doing here. We're going to take off in terms of the co-investments and co-partnerships among African sovereign wealth funds, but also with the Friends of Africa. I go back to that. I think the sky's the limit in terms of partnerships. It's strength in numbers, as you said, or l'union fait la force. Now, look, long term is crucial. This is the beauty of sovereign institutions, is that we have the luxury of building things for the long term, for future generations. So that goes without saying. But yes, there are some short and medium term, I think, pressures in general. That's just the way it is. Sovereign institutions are, public sector institutions effectively, and therefore, just looking at, in our case, la tutelle, c'est la présidence de la République de Djibouti, and therefore we work with the government of Djibouti as far as we are the investment arm of Djibouti. So we need to execute the best we can ASAP. Vision 2035. Now, Vision 2035 is in a dozen years. In the meantime, the way we work within FSD, we work with a 1 to 3 to 5 year investment horizon, really. I mean, this is as quick as we could do, even though we know that when we sow seeds today, we're going to see the rewards later. But there are a lot of things, a lot of low-hanging fruits, effectively, a lot of quick wins for today. So we have things that will be happening in the next 12 months, touch wood, they will be happening. Crowdfunding platform, 30 megawatt, the first solar project, data centers, etc. However, we need to leave some for the future, so we need to also, be pragmatic and realistic about it. Now, development strategies. I think in order to make these happen, I'd say commercial mindset to creating sustainable and inclusive economic growth around the world of sovereign wealth funds that have been successful. Again, we don't need to reinvent the wheel, so I go back to Temasek of Singapore because it's been around for 45-something years. However, huge respect for the QIAs and ADIAs, etc. of this world who have been around for several decades also. So I think we need to also be aware of that and highlight the success stories, but learn from them. I mean, we're not going to reinvent the wheel, as I said. So those sovereign wealth funds that have been successful have usually nurtured an approach that combines profit-seeking ethos, so not charities, with the development investment strategy that creates a population equipped with critical skills before jobs. So I go back to the human capital. So the role of sovereign institutions is effectively to make an impact on creating this human capital one way or another. Because we look at our role in terms of diversifying the economy, launching projects, being the catalyst for new projects. In the end, it's going to employ people, it's going to develop skills, and therefore that's the ideal that we need to develop for these countries. And then between brackets, I'll have to go back and mention that the Djiboutian franc has been pegged to the US dollar since 1949. Again, not many people know that, and I think we need to highlight some of the hidden things, hidden gems about countries like Djibouti. So there is no FX risk to worry about when investing in Djibouti, and this is wearing my hat as Djiboutian representative, effectively. So there's no dollar risk, there's nothing to worry about from that point of view. The risk premium when investing in Djibouti is quite low, and this goes back to the risk perception versus reality gap. The perception is that a huge risk when investing in Africa, whereas in this instance, it's a much lower risk than investing in some countries in Latin America, Asia, etc., that have a currency risk. So that's the commercial mindset I was talking about, but also having a commercial mindset to have partners. So we come across as the strategic partner with various international organizations who look to invest in Djibouti or in that part of Africa, Eastern Africa, and Africa in general. A commercial mindset that also protects the long-term interests of the sovereign. So we're not here to just ditch the assets of the country. We are in no rush. We are patient, as mentioned earlier. We can take our time. However, we need to unlock value. And last but not least, I'd say that as a former double minister of industry, SMEs, and energy, mining, and renewable energy of Tunisia, because some people thought I'm Djiboutian. Well, I work for Djibouti, but as a matter of fact, yes, I fight the colors of Djibouti as a CEO of the Djibouti Sovereign Wealth Fund. So having lived also in London for the last 25 years, having invested in around 100 countries, I can safely say, we live with our experiences. Economic stability, social stability, and political stability go hand in hand. That's just a fact. But the easy bit for us is to secure the economic stability. So our role really here is to make sure that we make an impact on inclusive and sustainable prosperity, and that will take care of the rest. I mean, when we work on the economic side of things, the social and the political side of things will work out, and this is what Africa needs. I mean, maybe it's a white elephant, but we need to just call things as they are. Africa has not been the most stable of continents over the last several decades. If you look at the number of countries that are unstable today because of civil war, whatever, I think there's quite a long list, unfortunately, which is why it's very important to encourage, I believe, as mentioned earlier, all African countries to have a sovereign wealth fund. It doesn't have to be massive, but I think it's important to start. And I think, again, leading by example here, I mean, I look at our example, Djibouti, and the 10 other funds that are represented today. I believe there's dozens that could follow in our foot, because it's not a matter of having hydrocarbons. I think that it's a myth. Some people told us, Djibouti, but you don't have well, it doesn't matter. We don't need the oil and gas. We have other things. Well, as it happens, we have revenues from military bases, which some people don't know, but we have a US military base. We have a Chinese, the only military base in the world, in Djibouti. We have the French, we have the Germans, Japanese, you name it. Well, it's a source of revenues, but it's more stable than oil, because it doesn't fluctuate. There's no volatility in the revenues from the military bases. So again, this is one of the things that I think is unknown. And I strongly believe that national, continental, international sovereign wealth funds can make a huge difference and impact on Africa's development and graduation effectively from developing economy status to emerging to developed in a win-win way. So it has to be win-win. Again, not a charity one-way thing. So thank you.
Thank you. Papa, coming back to you, FONSIS has been, I think, pretty innovative in how you have looked at investment opportunities and opportunistic, meaning housing. You have a housing partnership with the IFC. You invest in SMEs, which hasn't always been done. What are the opportunities that you're focused on? They're a little bit different than where you are now, that you want to take hold of. I have a particular interest in asking you all this question, and that is crypto and blockchain, which is a reality now in the world, and governments across the world, also in Africa, have not been at the forefront in planning or addressing the opportunity. And I'm wondering if you're permitted to say so, if you've thought about that, if it's something that you all are considering as a new opportunity, but just in general, what are the new opportunities that you're looking at?
Thank you. I'm a tech guy, and I'm really interested in that personally. Really,
Okay.
I can talk about for hours about that, for hours. But the thing is, he was talking about long term and short term. What we, as a sovereign fund, FONSIS, we are trying to create what we call in French espace budgétaire. I'm talking about the principle. I mean, we want our government budget to be allocated to areas or to expenses that cannot be done by private money. Just think that in terms of health, in the healthcare, the cardiologists, all the specialists that who will be starting in 35, they should enter medical school this year. I'm talking about 35. So if you want to bridge the gap of specialists for 35, we have to put all the needed number of medical students in first year this year. So this means building education infrastructure, having the teachers, or using tele-education. So if we don't have a choice. We have to think very long term, and then say, okay, what we have to do to take care of the long term, and also what we have to do to take care of the short term. And one thing is really important, as I say, we have to create saving capacity for our fellow citizens and for Africans. And the first thing to create saving capacity is owning your house. That's for us, the rent-own scheme company that we set up with IFC. we are developing with IFC is a 800 million investment opportunity. So it is 800 million saving opportunity also. So Senegalese or African can invest into these companies, and then that will enable the people to have assets that can use later on to invest. So that's why it's really important. SMEs, for us, we develop our fund-of-fund activity because what we want is in the second wave to have those teams who are managing our sub-fund for SMEs to be able to raise by their own their funds. So we're a kind of catalyzer. We do the first wave, and then we let the people, the private company, do the second wave. So we have to build the equity investment ecosystem. That's what we call being this ecosystem. So this being said, in the longer term also, collaboration is really key. And we are going to keep on investing in infra, transportation, toll roads, the new port in Senegal. We'll keep on investing in healthcare, in pharmaceutical, in agribusiness, especially transformation. In Senegal, we have a program of what we call Agropole. So we have the South Agropole, where we are going to do the transformation of products that are from the south of Senegal. We have the Center Agropole, the North Agropole, and the West one. And FONSIS is the one developing and investing in all those agropoles. So because really, this is really important. You have to produce, but you have to transform. So in the long term, this is what we will be doing and collaborating with people like IFC and Afrexim Bank. The Sovereign Wealth Fund of Africa, again, we have to co-invest between us. We have to exchange between us to make everything local. Commercial, for us, is a necessity, as I said earlier. We don't invest in a project that is not providing cash, and which is not commercially viable. So it is a necessity. What we are looking beyond that commercial feasibility and say, what are the impact that we will have, how we can be a tool for the government so that the government will concentrate their resources into what private companies cannot do. And looking on the long run, this is what FONSIS will be about. And also, FONSIS will be about managing funds. The strategic fund, the generation fund, what we call the Blue Fund. The Blue Fund will be investing, it's a 1.5 billion USD fund that will be investing into water, in the water sector, water and sanitation. And the 1.5 billion was only 15% of the needed investment in 10 years for the sector. So it is a small fraction of what is needed. But still, it is something that will count.
Any comments, not ours, but any succinct comments about crypto and blockchain, how you're thinking about that?
For me, crypto and blockchain, when I was at the Grande École in France, I was doing, my specialty was something related to distributed system. And when you talk about crypto, it's a distributed system. Right. And how you make sure that the confidence, how you digitalize. If you digitalize, you have an issue of confidence. And the way to solve it is to distribute it. And when you distribute it, how do you make sure that the elements that you distributed have enough confidence? In Africa, for me, I don't have any definitive answers. It's like on the mobile sector. In '96, I was doing the strategic planning for a Senegalese telco. So our best estimate for the number of subscribers at that time was 20,000 subscribers for that country. 20,000. And we did everything. We talked to everyone. We go to the North country, but we did not take into account some innovations. So for me, Africa, we have to be alert. We have to use crypto, if it enable our system to go to be digital, but also we have to take into account that if we use a technology that we don't have the control on, not the control, but in which we don't contribute really, so there is a risk. And the pandemic teaches us that we have to depend the maximum we can on ourselves. So we have to look at it, but look at it in a way of being actor, of building this system around crypto. It's like building system around artificial intelligence. This is something that we have to look at. In Senegal, we bought a super calculator. So, and right now, we are looking at having a program related to everything related to biotech. Okay. So biotech, how can we build artificial intelligence related to medical and all those type of things. So in terms of technology, crypto is a foundation, but we are working also on all the application that crypto will enable in terms of confidence and in terms of digitalization. But the key for us is how do we have a given level of control, at least at the continental level or the regional level.
Thank you. Idam, coming back to you, we have talked about the perspective of working to build greater partnership between the private sector and sovereign funds. But we've really talked about it from the perspective of sovereign funds in today's meeting. What have you heard, or what do you know about the interests of the private sector in engaging with sovereign wealth funds, why it is attractive to them, and do you have any examples of how that is being initiated by the private sector? Obviously, most commercial funds prefer local capital. I think that's a big opportunity for sovereign wealth funds to be able to leverage and mobilize additional capital by being a national or a sovereign investor into their own local economy. But any thoughts on that in terms of the private sector driving, pushing this collaboration and it being attractive to private sector actors in any examples?
I think the interests for the private sector is really around bringing the ecosystem together, which is why I commend what ITMA is doing, and partly because also this is something we at Afro Champions have tried to do in 2018 when we launched our Sovereign Wealth Fund report. It's clear that global inflationary challenges now, as well as also the fact that there is the war and all of these things are putting a stronger hold now on the kind of eagerness of sovereign wealth funds to be able to raise money from capital market, especially because of high interest rates, among others. But what is clear from the private sector standpoint is that there's appetite, because private sector is really about taking risk to be able to partner the sovereign wealth, and which is why we continue to invest in these reports and these studies, because there's opportunities that there's information, let me say information paucity, where private sector sees opportunities in certain areas. The sovereigns may not necessarily be eager, and then the sovereigns see opportunities in certain areas, but the private sector is not even aware. They hear of these deals after they're signed and already been executed, and there were opportunities that private sector could have clearly invested in. I mean, we've seen how in the digital space, private sector on their own, without the strategic support of governments, are even raising monies on their own to build fiber, among other things. So there is appetite to partner, to collaborate, but the focus has to be more on the project preparation side, the structuring side, and looking for also creating a pool of bankable deals. And that's where, the work that Commissioner Muchanga is doing at the AU with his 4D vision is so exciting, because it's helping to break a lot of these silos around the multi-departmental, multi-dimensional, multi-regulatory, multi-jurisdictional, elements that exist that make cross-collaboration, because the monies want to go into projects that scale. Unfortunately, in the kind of investment opportunities that we see, they're more at domestic levels. And so that 4D agenda is going to be extremely key in creating that surface area and bringing all the kind of stakeholders that are necessary to make the money flow into these projects.
I have one more question for you all, and then we're going to come back to you, Edom, about the African Sovereign Wealth Fund Index as we wrap the panel. And that is, capital markets development has been elusive for a number of actors, whether it's been DF, development finance, institution money coming in, or to some extent, sovereign money. What's your perspective on that? How can we accelerate capital markets development? Because at the end of the day, liquidity is going to be important for all asset owners and all investors across the spectrum. And that is something that, whether it's SMEs or the larger corporates, that is a nascent endeavor. Although there has been, rise in listings on the Johannesburg Exchange, Nigeria, Kenya, but what we see also is a few listings dominating the market cap. Any thoughts on that?
Well, that's a very good question because I've been covering the markets for the last couple of decades globally, and I think developing and frontier countries in general remain far behind in terms of capital markets development and liquidity, depth of these markets. There's no one answer to that, but I think one important variable in this complicated equation is institutional investors. Now, we are talking about sovereign institutions where part of our job in the medium to long term would have to be also part of these financial markets to bring in demand, because it goes both sides. You have the supply and the demand. Well, if you're going to bring supply, there's no demand, and demand has got to come from Africa, because for now, international capital is not really keen on coming into markets like Africa. So given that the demand is hard to get, we need to bring in the demand from inside, from within, which is why I think it's a very good question here. I go back to our mandate as a sovereign wealth fund. Ultimately, up to 60% of our portfolio can be diversified internationally, but it's all asset classes. So ultimately, our portfolio will be multi-asset, listed and private equity, etc., real estate, you name it, private, fixed income, obviously. We're not going to go into Bitcoin, definitely not. As long as I'm CEO, we're not going to do Bitcoins and that sovereign wealth fund. Maybe gold as a hedge, that's another asset class. A multi-sector, so multi-asset classes, multi-sector, and multi-geographies. So for now, we'd love to see, therefore, the liquidity in terms of listed equities happen so that then we can tap into it. When I say we, it's all African sovereign wealth funds. And there's about 10 of them today represented. If we have a couple dozen more, I think, of institutional funds like that, I believe then we can make a difference effectively. And this is not something I thought about, I must say, even 5 years ago. I wasn't thinking of African sovereign wealth funds as potential players. And I go back to the fact that we don't need to reinvent the wheel. If we look at markets like Chile, like Poland, now these two have their own institutional investors, key actors on their own stock markets and financial markets. And the same applies to the Gulf countries. I mean, the Gulf sovereign wealth funds are big players into their own equity markets. So I think it's a good point. Thank you.
Thank you. Dr. Edom, I want to come back to you as we think about wrapping the panel. We've talked about a number of great things I think have put a punctuation or an exclamation point behind Pan-African investment, greater collaboration between the private and public sector, innovative strategies, thoughts about how to deal with some of the paradoxes of opportunity and challenges. A lot of this information is covered in a report that you and Confidence has helped to produce. I made a contribution to it as well, and that's the Africa Sovereign Wealth Fund Index. And those of you who may not know about it, it was originally published in 2018, and there's a 2022 version, which will be available after this conference, and we're happy that ITHMAR is helping us to facilitate that. But can you give us just an overview of the index, the finer points, as we look to conclude the panel?
In brevity, in 2018, we commissioned Confidence because, again, we realized that the role that provinces had to play was very important in the integration agenda. There was a need to also mobilize them for co-investments, among other things. So we try to understand, how they existed, how they were structured, the investment mandate, governance, among other things. And so those were the indicators that sort of fed into the 2018 Sovereign Wealth Fund Index. Some of the members and funds that are currently here were at that launch of that report. I see Solomon here, and I see, I don't see Agasiro, though I see Uche and others who are here. So that was a report we published in 2018. Then we're just looking at the contribution of those funds towards the financing needs of their countries. In the 2022 reports, we've moved more into this, looking at the economic impact they're having within their countries. At the time also, there were quite a number of funds like Libya and Algeria that are quite sizable funds but are not currently covered in this current report. We've also realized with some of the findings of this report, we're not going to go into the rankings and all of that, but mainly the key findings is really the fact that in 2018, the number of funds we had then and the kind of projections we made about there were going to be more and more funds coming has actually come true. We didn't have Djibouti then, we didn't have Egypt then, so we have more funds now that are projected. This year we're projecting, in this report, we're projecting that by 2030, by 2030 there will be 70% of the states in Africa that would have funds. We think that within the next 3-4 years, we're going to see a lot more, mostly from East Africa. We've seen growth significantly in terms of governance. The overall, in terms of 9% improvement, we've seen transparency also improve significantly. Investment mandates continue to move beyond just within the country to now looking at cooperation across the continent. And you've mentioned some examples already about how ITMA, NSI, Nigeria, Angola, and others are, Djibouti are already signing cross-collaboration partnerships. And then finally, the element with respect to size of the fund, that hasn't improved significantly in terms of our report. So its size, investment mandate, is governance, transparency, and there's one more, which is, a source of funds. How innovative is the source of funds? If it moving away from just the usual looking for oil and gas and commodities into some of those innovative ways. And then there's a SAP indicator that is looking also at the cross-collaboration innovations around the continent. So that's basically the general perspective. And again, we're happy to share the report after this conference. Thank you.
Papa, I understand you have a perspective on the capital markets that you wanted to get in before we close the panel.
Yes, very quickly. As you say, we can have action on the supply side. The capital market can be an exit road for our investment. So this is on the supply side. And if we have local investment, if the population feels that the company is local to them, so they will be able to go to the stock exchange and buy. That's why it's really important. We have to take into account the way people invest in Africa, let's say in South Africa or in North Africa or in Central Africa. This is really important in terms of culture. The second thing is that for saving funds like the Generation Fund, if we have to invest into fixed income, if we follow the regular rating, which will rate the African issued bond at A2 or B1 or whatever, so we have to buy our own bonds. So it means that even if it is perceived like less secure than the US one, I have seen a few African countries default in the story. You can count them. So that's why it's very important as sovereign wealth fund also to have a more, a more active role in buying African bonds, so that at this time we will have on the supply side for stock engine, and also on the demand side, we'll put our own money there. And if we put our own money, we can make other people put their money. But this demand for us courage and go against the wave. This is important. Think out of the box.
Thank you. Well, I think that's a good way to conclude the panel with the exhortation to think out of the box, to continue to put in your own money to attract investment. And Dr. Edom, thank you so much for the highlight of the report. I should say that the Africa Sovereign Wealth Fund Index is meant to be collaborative. And so I know on the part of Michael Koto from Confidence, who couldn't be here with us for family reasons, that's important to state. It's a collaborative effort where in years going ahead, we would love to get the feedback from this audience and the stakeholders here to make it a useful tool. And it is an indigenous product, which I think is also a very good thing. So thank you, gentlemen, Slim, Papa, Adam, thank you very much, and thank you all as well.
Thank you. Thank you so much. I think that it's quite interesting all what we heard this afternoon about all the opportunities that can be seized, but also that need some ecosystem to be built to be seized. We continue our discussion, that I'm inviting now our next keynote speaker, who is Kayode Ogonro, Senior Advisor at the Ghana Petroleum Fund.
Hello, good afternoon, everyone. I must say it's the first time I've had theme music before a presentation. I'm here to present on the Development Bank of Ghana. Mr. Kwamina Duka, who's the CEO of DBG, was unable to attend this conference. He sends his regrets. Kay is interesting because he wears two hats. He serves as chairman of the Ghana Petroleum Fund's Investment Advisory Committee, and also as the CEO of the newly funded Development Bank of Ghana, which launched last week in Accra. What we wanted to do today, and I have to add also that this particular presentation is a bit of an honor for me, as I'm half Nigerian, half Ghanaian, and had the opportunity to be a founding team member of the Nigeria Sovereign Investment Authority, and then was pulled to my motherland, Ghana, to also help out with Ghana Petroleum Funds. So, thank you for the opportunity to do both. In terms of the Ghana's development portfolio, I wanted to point out that really we've looked at the developments in three areas in terms of equity and also debt when we get to the Development Bank of Ghana. The Ghana Petroleum Funds were organized in 2011 as part of really a savings fund that many of us came from this idea of savings of hydrocarbon wealth. Ghana became an oil producer and was set up under the aegis of the Ministry of Finance and managed by the Bank of Ghana, Ghana's central bank, so under the Norwegian model. Secondarily, the Investment Advisory Committee advises the Minister directly in terms of asset allocation and so forth. And per some of the comments of the earlier conversation, we're actually in the Ghana Petroleum Fund's GPF limited to fixed income at the moment, but in the process of moving to equity. And also thankful we didn't get that approval a year ago, given the way markets have turned. The second fund is the Ghana Infrastructure Investment Fund, and Ghana is well represented here by Solomon, CEO of GIF, which was founded in 2014, and has really been a pioneer in the Ghanaian infrastructure sector, focused on businesses the business of infrastructure. And then lastly, the Development Bank of Ghana. Oh, even better. Hello? Development Bank of Ghana. And so in 2020, with COVID delayed, we sought to find a solution to the SME gap in terms of funding. So that's debt, as we're looking at. And really, the majority of funds available in the Ghanaian banking sector are, less than 3-year tenor and very high interest rates. So we really worked closely with some of the development finance partners to develop a model that's been tried and tested in other emerging markets and other LMICs. And where that has come to is the founding of the Development Bank of Ghana. One area I'd like to highlight is really, and it's been a theme of this conference, about partnerships. And from the Investment Advisory Committee standpoint, we benefit tremendously from partnerships from NORAD, the Norwegian Development Agency, who organized workshops with Norges Bank and folks who were early on in terms of founding the Santiago Principles, worked very closely with GOGIG, the Ghana Oil Fund, Technical Assistance Fund by the UK's Foreign Commonwealth Development Office, FCDO, previously known as DFID. Singapore Corporate Enterprise, we have pretty good relationship with Singapore, just historically dating back to Dr. Nkrumah's time, and also with the International Forum of Sovereign Wealth Funds in terms of knowledge partnerships and best practices. And we really see the emergence of ASIF that to really be central to the next stages here of collaboration, to really collaborate inter-Africa versus looking completely outside. So we're quite pleased with the development of ASIF and the leadership of Ithmar Capital. Now, the Development Bank of Ghana, DBG, is really born out of partnerships and born out of this idea to focus on partnerships, really under just the tremendous support from the African Development Bank, World Bank Group, European Investment Bank, KfW, and more recently, actually, knowledge-sharing partnership with the Nigeria Sovereign Investment Authority, where we been doing knowledge-sharing exercises and exchanges based on their investments in the Development Bank of Nigeria, of which many of the same partners were key elements of that. So Development Bank of Ghana, I'll take you very quickly, sort of our journey in terms of where we are. Established in 2020, and in the last sort of 18 months went through regulatory frameworks and approvals, and were approved as a fully fledged Class 4 DFI in 2021. And commenced activities formally with our launch last week. In terms of our values in the Development Bank of Ghana, much like I think these are really common values with ASIF members, is really what we like to call clean, lean, and green. And the clean part we found has paid dividends for us from our sovereign wealth fund peers and in other countries and also in development banks in terms of just transparency, focus on compliance, risk management, and really attracting truly professional talent, and looking into just various pools, even into the diaspora and so forth, to attract talent. And then also the Development Bank of Ghana also seeking to be digitally native, which has really emerged in the last 18 months, last 2 years of the pandemic. This was already really in the DNA of the organization when it was conceived in early 2020. Lean, really compact, efficient. We're not a large bureaucracy. We're not a large institution, but we're very focused. And we really rely on subject matter experts, and things have come together quite well. And of course, green, in terms of our ESG focus, and also financial sustainability. And that we're not a grant-making institution, we're not here to take the first loss, we're really here to be sort of sustainably financed and operating. Vision and mission statement. Development Bank of Ghana, we seek to act as a business enabler and a long-term capital provider in the Ghanaian market. So this is language and sort of thematically something you'll be very familiar with in terms of development banks. And locally we thought, look, we have equity funds in terms of GIF, we have savings funds in terms of Ghana Petroleum funds, but what we're looking at domestically for the private sector. And that's really been really the critique of many sovereign wealth funds, all of us in the last several years, is of what's our local impact going to be. In the case of Ghana, the portfolio approach we took is to set each entity up as independent. And so DBG has a very clear and core focus. Business model is something that you'll recognize, classical development bank model with sector focus on agribusiness, manufacturing, ICT, and high-value service, basically high-value added services. And essentially the model is fairly straightforward. Long-term financing, 10-year plus tenor at scale, and really on lending to our clients, which are principally universal banks and other financial institutions. And this is really lending into the private sector in Ghana. And we're operating based on the interest rate spreads. And in terms of how do we enter in the market, we're really a wholesale bank, offering loans to banks and also refinancing portfolios of debt in portfolios of institutions could actually help us extend the tenor of loans in the sector and also seek to reduce the interest rates over a longer period of time, which will really help to, frankly, create the multiplier effects that we're all looking for. That also complements how we begin to look at equity investments in country, which is a bit in terms of scale and challenge. We believe that if we can also sort of address the debt side, that can help us really provide a full scale I'll say, a full-scale, full-service solution in terms of the SME financing. And in terms of the special funds we have, we're looking at really business development services, partial credit guarantee, factoring, and equity. And that's with support from KfW and the World Bank. We've been tremendous partners to us. In terms of the funding structure, again, in terms of transparency, the bank is principally owned by Ministry of Finance in Ghana with grant support from African Development Bank and the World Bank. And on the debt side, in terms of long-term debt financing, European Investment Bank, World Bank, and KfW. So total funding, close to $300 million on the equity side, and on the debt side, 425, and likely growing as we begin the deployment program. So where are we now? We've established a strong foundation in terms of the operating team, core operating principles, and just really establishing sort of just all of our systems, particularly in terms of compliance. In terms of preparing for investment activities, we filled most of the key staff provisions quite quickly, and even during COVID. Really, this was something that was seen in terms of as we come out of the COVID crisis and build back better to be ready to facilitate investments in the sector, particularly long-term debt financing, as we saw this would help in COVID resilience. And in terms of technology, really, we've been focused on core IT systems, having them set up and running, and then credit policies and underwriting standards will be really quite key for us to develop that talent domestically, not just looking outside to development banks or institutions to outsource that, but really develop that domestic talent to then also be an effective partner, really, to the development banks who will likely partner with in some of the larger financings that we look at. And really, the consistent theme of the conference is really developing and deepening our partnerships. And so we've met, the World Bank and KfW's effectiveness conditions, and we're moving ahead. And so, in terms of to wrap up, what we're looking to do here, much like the sovereign fund side, is really to build, generational success. And what are the foundations of that? As we know, it's strong governance is the foundation, and it's the robust asset liability management, infrastructure. And really, for us, the core focus is on underwriting skills and talent to really make sure that we're lending, profitably to the real sector, and that will enable us to grow and potentially expand our capital to other IFIs and other, private investors who may seek to invest in the Development Bank of Ghana at a certain point. And so, and only with this, can we, safely lend, to the real sector and to lend sustainably. And so, as we said, this underpins, our determination to hire the best talent in the organization, and we're fairly open in terms of that. And thank you.
Thank you very much. Thank you. You can just leave them there. Thank you. Ladies and gentlemen, I'm just inviting you now for a break, a half-an-hour break, and then we'll be back to continue. Thank you. Welcome again. We will proceed with our next session now in this afternoon. Please join me to welcome Mr. Solomon Kenor, the Vice President of for Private Sector Infrastructure and Industrialization at the African Development Bank, for a new Teesside chat. Please. So happy to chat with you for a few minutes, at least to understand a little bit what's going on in Africa today from your point of view. I would like to start maybe with the ASIF, and what role can a platform like this one play in all this reshaping Africa and new paradigms in Africa that we've been talking about today?
So my very good friend Jun Young, who's seated up front, told me, Solomon, be brief, very short. You know, this is the graveyard shift, so I promise to be brief. So ASIF is really fantastic. And where's Obed?
Abed is here.
Congratulations on this. You and I have been talking for about 18 months. I joined the AFDB during the height of COVID. And so we've known each other by Zoom, and we've been chatting, and it's great to really see this finally come to fruition. And I'll tell you why. So we at the African Development Bank, first of all, believe in really working with African institutions as partners. So His Excellency, Ambassador Muchanga talked about ASEA, the Association of Security Exchanges. We've actually supported the Association of Securities Exchanges, established that association. We provided a grant for that secretariat to operate. And part of the reason we've done that is we wanted to really create a virtual stock exchange, Pan-African stock exchange. So you can have cross listings, you can actually trade across borders, etc. So that's one. We've also, since about the 70s, created the Association of African DFIs. And that includes every African DFI you can think about, from TDB, to AfriExim, to DBSA, etc. And the Development Bank of Ghana, which we've invested in, and also the Development Bank of Nigeria are part of it. So for us, it's very important to really bring African institutions together. Okay, and for me in particular, seeing actually the African sovereign investment funds come together is really a highlight. It's a big highlight because as much as we talk about attracting FDI, I always talk about the $2 trillion Africa story. The $2 trillion Africa story, which Ambassador Muchanga touched on for a second, is really the assets under management from sovereign wealth funds, from pension funds, domestic pension funds, and also really from the investable pools of primarily life insurance companies and other savings vehicles. Most of this are invested in government treasuries. Most government treasuries go to fund not capex necessarily of government, but recurring expenditures. So this is not productive. So if we can find ways to channel this into the infrastructure and strategic investment spaces that the sovereign wealth funds actually invest in, then that's key. Now, let me give you examples of the way in which we've been working with some African sovereign investment funds and also African sovereign wealth funds, and then you would begin to see why, for me, it's great to have them all together. Solomon Asamoah, are you here? Am I permitted to? Okay. So we've provided a $75 million loan to the Ghana Infrastructure Investment Fund. It's a long-term US dollar facility. Once they establish a track record of really paying back, we would take the $75 million equivalent and rather use it as a partial credit guarantee for them to issue a Euro bond, assuming the leverage of 4 to 5 times. Just imagine what we would have done with them. And they, as the Prime Minister Zinzu said, then have some leverage off their equity, and they can do more. Now, is Uche here? Do I have permission to talk about the way we've worked together? Okay. Okay. You know, he's former Goldman Sachs, just as Jin Yong. They believe in brevity. Okay. So in the case of Uche, we've worked together actually in in building up the private equity asset class in Nigeria, where the two of us have been the major fund of funds players. We were the ones there before, but it's always good to have a Nigerian institution that's a fund of funds, and we've really co-invested in several, private equity funds managed really by Nigerian fund managers, including first-time fund managers. So we're building out this private equity class. But our relationship goes beyond that. So the pension fund industry in Nigeria is probably sized at about $30 billion. Once again, most of it going to government treasuries and most of it going to recurring expenses. We've worked with NSIA to actually create a local institution called InfraCredit Nigeria, which credit wraps infrastructure bonds and corporate bonds. So all of a sudden, with our limited capital, how much have I put in? It's about what, $15, $20 million that we've put in. Through that, so far, we've already catalyzed about $200 million worth of local currency bonds. So for me, these are the key partnership values that I see. And to actually have all the sovereign investor funds together in one institution allows me to really cross-fertilize and have these conversations in real time. Earlier today, we signed the Alliance for Green Infrastructure Initiative with ASIF. I see ASIF as a critical partner, and it's great for me to actually sign this with ASIF, as opposed to actually going to sign it with the 10 different sovereign wealth funds that really came together. So I promise to be brief. I'll stop there.
So that actually takes me to another place, because we're talking a lot about how to attract international investors, while it is also important to talk about the money that is already in Africa, right?
Yes.
And on the same time, a platform like ASIF helps maybe create the trust ecosystem for others to see that we are already like trading between us and building bridges in Africa.
No, that's absolutely true. So I know, quite a number of investors from the Gulf, the gentleman from Kuwait Investment Authority, et cetera, are here. And we understand, that, you're going to be focused really on risk-adjusted returns. So part of our partnership with the African, sovereign investors is to bring you at the right time into the right projects. We're not always going to bring you into greenfield projects to begin with, because, your impetus and your reason is probably better to bring you on a secondary sale, to begin with. So these are projects that have been de-risked, post-construction, financial completion achieved, and it would be good to bring you in at that point, but also where there's still some equity upside, okay? So, because we know you're looking for the equity returns as well. And then with time, as you get comfortable, really with the risk, the difference between perception and reality, then you would be really comfortable coming a lot earlier. In some cases, if it's on the credit side, not the equity side, then we can actually use some of our instruments, like partial credit guarantees to give you some sort of first loss, kind of cover. But on the equity side, we can also provide partial risk guarantees to the project to counter-guarantee government obligations. So if it's a power project, we can guarantee government's obligation on the PPA. So for me, it's first of all to get the sovereign investors in. They operate really with the governance principles, the standards of these global investors. It's a lot easier then to bring the global investors along, even if not in the first round, in the second round. And then maybe I should use an example with Uche. In another life, I did a project with Temasek. As much as the institution I was with provides good political cover, I realized that Uche should have been part of that deal a lot earlier, because he would have been able to better manage the political risks in real time. And so for me, my advice to the Gulf country, investors, go with the co-investment approach with the sovereign investor funds, because that is smart. It's smart not just in terms of coming in at entry. It's smart because if you're doing infrastructure or you're doing industrial projects, it's a long life. You need really, these types of partners.
When we talk about collaboration, especially in the region, we talk about mobility. And we saw that a lot of guests here, for example, had to go from Africa to Europe to come back to Africa, for example. So this is one of the challenges, is mobility of investments, but also of investors.
Yes. Sometimes we have to also pay attention to the reality of politics, right? If every country were to open its borders completely, the fear is that they're going to be swamped by people moving from where the lack of resources is to where, the resources are. I think the first, what we need to first do is really create more free movement of business people, not necessarily free movement of people, because we would all say yes, but then people will frustrate it, right? So I think it's more, creating the business visa. So my hope is that, where's Edem? Edem has always been creative in this space. But, my hope is that we can actually create more, business visas, so that business people can actually move across. And when I say business people, I don't only mean, those wearing the great suits. I'm also talking about, the traders across, the borders as well.
Of course. Let's talk about infrastructure. That's also one of the main fields maybe that are today interesting for private funding projects for development of Africa. And we saw during COVID pandemic, for example, how it is important to invest in infrastructure, health infrastructure, and in that matter, for example.
No, so there was an infrastructure gap, and when people think about infrastructure, it's primarily transport and energy. There was an infrastructure gap of $50 to $90 billion a year before COVID. But I think COVID also exposed us, to other forms of infrastructure that are critically needed. And you talked about healthcare infrastructure. I would even go further and say, the pharmaceutical and vaccine infrastructure is also needed. And part of the reason that we've been exposed is that we've not been part of global supply chains. And so, when everybody began to really be nationalistic, the opportunities for us to actually have those resources available for our emergency needs dried out. So the lesson to us is not import substitution, but is to actually have a minimum security of supply or a preparedness for the next pandemic or epidemic when it comes to health and pharmaceutical and vaccine infrastructure. Now, the other, infrastructure that became prioritized that we all thought was well covered by the private sector is really data. It's really telecoms connectivity. Because during the COVID period, we all had to learn how to really continue to operate from our homes.
Right.
Yeah? And when I say from our homes, I even mean businesses had to really learn to operate from their business without really movement. So, data connectivity is definitely, going to be, reprioritized. And we're talking about broadband. And then also, putting the right value-added services on top of that broadband infrastructure is going to be prioritized. So this is where it becomes also a key enabler. We're going to see, health tech projects, ag tech projects, ed tech projects, and all the techs. Of course, everybody knows about the fintechs and the unicorns, but we're going to see this really go into several other areas. And for us, technology is is a key enabler. Now, for us as the African Development Bank, we're known as the infrastructure bank. So we talked about the CFTA, the African Continental Free Trade Area. For us, that's what we look to implement. So, our road projects, our rail projects, our port projects, we look at them in an integrated manner so that we can ultimately deliver, relatively low transportation and logistic costs for us to not only trade with each other profitably, but be able to compete with products really coming from other continents. Over the next 2 years, about $2 billion worth of our infrastructure investments would be what we call CFTA compliant. In other words, they're all focused really in underpinning regional integration.
So I guess that we, in joining efforts, we have more leverage as well.
Absolutely, absolutely. And working with the sovereign investor funds, especially, I like what Slim said, you know, everybody should focus on their areas of comparative advantage, because what we're trying to do, and by the way, I don't believe in having 54 sovereign investor funds, because if you do that, you may miss out really on the regional value chains. But even if we have 54, quite a number have to, you know, collaborate, you know, in strategic value chains, okay? So if you're looking at cotton to textiles, there are about 4 or 5 different countries in Africa that their strategic investment funds really have to work together. So anyway, I thought I'll add that.
Thank you very much. Thank you. And we're just right on time, actually. Okay. So that was perfect. Thank you very much, Mr. Salman Kainer.
Thank you. And Jin Yong, did I do okay? Okay, great.
Thank you. Thank you. Thank you. Time now to call to the stage our next panelist and their moderator, Mrs. Sadi Eslawi Benani, President and CEO of Valiance. And the theme of this new roundtable is Agility, Sustainability Towards a Resilient and Inclusive Future. The floor is yours.
Hello, everyone. I am delighted to be with you at this event, and I am also delighted to be moderating a great panel with great person. This panel will mix French and English, so don't hesitate to wear your headphones. It's a Canadian panel, as it was said this morning. So the introduction will be in French, and after the question and the answer, of course, can be in French or in English as you want. Ce panel parle de 2 notions qui sont absolument fondamentales à notre époque, l'agilité et la durabilité. L'agilité dans un monde en perpétuel mouvement, un monde totalement incertain, où une crise sanitaire peut nous tomber dessus du jour au lendemain, une crise géopolitique également, une crise économique, et où par nécessité, il faut changer de mécanisme, changer de façon d'agir et essayer d'agir et de réagir en étant plus agile. Un monde également, de par son incertitude, qui nous ramène à l'essentiel. Et cet essentiel, c'est évidemment la durabilité. C'est l'humain au centre, c'est la planète au centre de toutes nos décisions. Et donc une grande responsabilité dans les actions qui sont menées. Et quand on parle de responsabilité, bien évidemment, elle est à la fois économique, sociale et environnementale. Et ces 2 notions, bien évidemment, se croisent parce que l'investissement dans la durabilité, par nature, demande innovation et agilité, de par ses spécificités, le coût, la durée, le rendement, la rapidité d'évolution des technologies, etc., ça demande une certaine agilité. Et les fonds souverains sont justement un formidable outil qui permet à la fois cette agilité et cet investissement coûteux et plus exigeant, à rendement souvent plus long terme, dans la durabilité. Et ce sont ces éléments-là que nous allons pouvoir partager aujourd'hui avec nos prestigieux invités. J'ai le plaisir d'avoir donc avec nous sur ce panel M. Uche Orji, donc qui est PDG de la Nigerian Sovereign Investment Authority. Nous avons aussi avec nous M. Hakim Daouda, qui est directeur général du Fonds gabonais d'investissement stratégique. M. Jin Yong Chai, désolé pour la prononciation si elle n'est pas bonne, qui est partenaire chez Global Infrastructure Partners. Et enfin, nous avons M. Ayman Suleiman, qui est donc directeur général du Fonds souverain égyptien. So, Mr. Orji, the first question is for you. Given the long history of NSAI, how has the fund shown its agility over the time to adapt to new national and to new economic priorities?
All right. Thank you. Thank you for the question. I think there are probably 2 or 3 aspects to how one will describe it. And this is a very important question, especially in the markets that we find ourselves. Okay, many things are changing. We have, for the first time, the world is dealing with inflation, which is something you have almost forgotten about. If you were investing in the developed market, we had negative interest rates, now interest rates are rising. So the ability of the fund to reallocate capital very quickly is very important. And of course, you cannot be doing that once the event is there. You need to have done it a little bit before. So luckily for us, we had anticipated part of this challenge with inflation as far back as early last year, and were able to reallocate certain assets from tech, emerging market bonds, which are the areas that have been hit. But still, it still catches to you. But let me speak to specifics to 2 other areas, which is our domestic investments. The first is investments made in social infrastructure and healthcare. One of the biggest challenges that we all faced at the point when COVID started was how quickly can we move to ensure that our healthcare systems are effective and ready to respond. And the fund had started a healthcare sub-segment. We actually have a healthcare company that had made 3 investments earlier, and those proved to be pivotal and very important at the point when the healthcare systems in the world seized up. We are now moving forward to roll out these centers across the country, including building a center for advanced medicine. We also realized that pharmaceuticals became an area of importance. Again, we're learning from some of our African countries, Egypt in particular, on investing in areas such as pharmaceuticals. So the fund has had to react to address its key issues. Now, sovereign wealth funds are not a concept that is built in the sky. Funds are designed to solve the problems of their countries. And nobody's going to tell you what problems to solve. You need to figure out what your problems are and be able to solve it. So the second aspect I probably want to speak to is what we're doing in areas like agriculture and food security. Again, one of the biggest challenges we faced more recently, and many countries here are facing it, is what do you do about agro-inputs such as fertilizer, the ones that is caught up with Russia in particular. We have an ongoing collaboration with OCP of Morocco. We're making investments in ammonia, we're making investments in diammonium phosphate that is needed in our specific countries. But we have a governance system that allows us to operate a little bit independently. And we're able to, government called upon us to help in solving this. And we're able to negotiate, even with Russia, in getting the right level of potash needed for the country. Now, it may sound a little bit off, but these things are also designed to be profitable and run effectively. So as a sovereign investment fund, I would probably step back to answer this question by saying the agility lies in the governance and the management of the fund, your investment policy statements, as long as you're adhering to them, but the entrepreneurial nature of the management of those funds to respond to the issues of the day. So we've worked very well with the government in addressing some of these issues, but I could go on many, many examples. Solomon mentioned quite a few of them. But it is about being entrepreneurial, having an investment policy statement, and having a process that allows you to be able to respond very quickly. But as a manager, you should move where, for those who play hockey, you should already be where the puck is moving, as opposed to at the moment when the crisis hits, you're starting to react. But even then, if something catches you unawares, you need to be able to have an investment system that allows you to respond very, very quickly. And this is the essence of funds like this. They're run independently, well-governed, and in many ways, I think they're able to respond to the issues of the day.
Merci, Monsieur Orji. Merci beaucoup. Donc, gouvernance, entrepreneuriat, quelque part aussi, sont des mots importants pour pouvoir être agile. Mr. Dauda, tell me please, in your view, how can the continent capitalize on the agility of its sovereign investor to drive a more resilient and inclusive growth?
Thank you. I think first, just let's put it into context. By 2050, the size of the population of the African cities will have doubled. And these people will need housing, they will need water, they will need energy, they will need transport system. That's one part of it. The second part, most of our countries have embarked into a journey whereby they're transitioning. I'll take the example of Gabon, from a country that has been exporting natural resources to a country that is now trying to have a diversified economy exporting processed goods. So for all that, we need infrastructure again. We need water, we need ports, we need energy. So once you realize that you need energy, you need to be able to match that need with the type of capital. So you need long-term patient capital, and that's where sovereign wealth fund comes into play. And also come into play as this local partner, which has a good understanding of the local regulation, the regulatory framework, who has access. I'm humbled to say that actually I can engage with most of the government via WhatsApp. And this is not because I'm Akim, it's just because I happen to lead the Sovereign Wealth Fund. But this is the type of access that you need. And also, when we talk about infrastructure, the development time and the preparation of those projects are really critical. And it reminds me of a conversation we are having over lunch, saying that we need to be able to de-risk our project if we want them to be financed. Last week, we were at another conference, and we were talking with an infrastructure fund about a project that we believe is a really profitable, economically viable project. But the first question that we were asked is, do you have a pre-feasibility study on which we can base our analysis of the project? But that pre-feasibility study is about $1 million. Who can finance that if it's not a sovereign wealth fund? To at least start de-risking the project and hope to be able to stimulate additional capital from foreign investors. So these are really the type of roles that I really believe that our institution are designed or are created to play. Also, let me illustrate that with two examples that will ties into what my brother Uche just mentioned. Let's look at the healthcare sector. Obviously, the past 2 years, we all realized that we really had to strengthen our healthcare systems. And we were approached by the government to take over the National Pharmaceutical Distribution Company, which actually was a defunct government agency. Actually, if you were coming to Gabon 3-4 years ago, you will go to a public hospital, you're hospitalized, then you have to get one of your relatives to go to a private pharmacy to get your prescription, which was not working, and it was creating also inefficiency in the social insurance system. We took it over with a Ghanaian partner, a company called M-Pharma. So this is also an example of a South-South partnership. We brought in innovation, we brought in artificial intelligence that really help us improve the planification and the procurement of those pharmaceuticals. And we're quite happy to say that today when you go to a public hospital, you can get your drugs at your bed. So that's one of the examples, and I can go on and on about energy as well. Let me quickly just finish on the energy aspect, which ties into the conversation we had earlier this morning, because this is the type of sector where you kill two birds with one stone. Basically building the infrastructure that you need for your development today, but still ensuring that you're securing a solid saving base for the future generation, because those infrastructure will be run over 30 years and generate those revenues. Thank you.
Thank you very much. Another question for you, please. In your opinion, what do you think are going to be the more challenging factors to capitalize on the agility of the sovereign investors?
Actually, you're asking me what are the opportunities, I believe, right?
Yes.
Talking about that, I think it was mentioned at length, governance. Governance is really important to ensure that our institution has the right foundation for them to thrive. Mm-hmm. And that starts even when we design our institutions. Another example, if I take our example, we thought long and hard about under which authority to put the sovereign wealth fund. And in the end, it was decided to pull it because the discussion was, should we put it under the authority of the Ministry of Economy and Finance or under a higher authority? Finally, it was decided to put it under the authority of His Excellency the President, and for two reasons. First one, it was obviously to shield the sovereign wealth fund from any political interference, and also to also protect the Ministry of Finance from any punctual solicitation from his colleagues, and with all due respect to your excellencies in the room. And the reality is that, because as it was also mentioned earlier, sovereign wealth funds are here to tackle generational issues, which cannot be impacted by political volatility. So governance. Second, I would say scale and risk. I'll put them together. We need scale, and Solomon just mentioned it earlier. There wouldn't be any point for each of us going to the market with our single project. We need to be able to pull our project together if we really want to tap into those large capital, those large foreign direct investments. And the third one will be governance. Governance comes with, governance. Third one will be environment. I would say environment and social impact. And these two are really the cornerstone of sustainability. We need to ensure that we achieve a double bottom line when we analyze our project in terms of economical viability and social viability, and environmental viability to ensure that the ports, roads, and airports that we're building today will pass the test of time. Thank you.
Thank you very much. Mr. Suleiman, as a more recently established fund, how is TSFE embedding sustainability in its strategy?
Very good. Thank you, and thank you for staying awake, by the way. I think this is an important part of a latecomer to a very mature industry. So as a fund, when we came to existence, we had a lot of playbooks to read from. And that is how we try and build sustainability or bake it into our investment strategies. And I think the concept of sustainability has been evolving over the past years and over the past decade. And now it's becoming defined in financial sustainability and also resource sustainability. So in a market like Egypt, for instance, we look at borrowing from what Solomon was saying earlier. We borrow from where our relative competitive advantage is. So we have renewables. So how do we create a renewable strategy or renewable sector and create an economic avenue out of this? So one, you have resource sustainability, but then the financial discipline and the feasibility and the pre-feasibility, pre-baking everything into your investment proposition. And we run as a private equity fund, so we put our money where our mouth is, and when we have skin in the game, then we can crowd in partners. This is a big part of the discipline, a big part of the mindset that we have to bring to the table. And the Sovereign Fund of Egypt is no foreign, so we all feel the same pains. I feel exactly what it means to look for the proper sponsorship for the fund, because maybe the greater good of an economy lies way beyond the scope or the horizon of a minister of finance or a minister of public enterprise. These are issues that maybe sovereign funds have to really rise above to think about the greater good and what a flow of capital needs to look like, what a structure of ownership and private sector role or acumen in managing those assets. So I think this is where we try and think sustainability with those two lenses on. The key ingredient that we are also very much focused on to really deliver sustainable investment opportunities are the ones that are looking at the future generations. So we walk that talk as opposed to thinking about short-term gains that solve short-term problems. Everyone has short-term problems. We all live through those cycles. But if you're running a 30-year or a 35-year concession for a solar farm or for a wind farm, this is a piece of infrastructure that will be there through cycles, through generations, through governments and administrations. So this is something that developers look beyond that. when you're lucky enough to have the appetite of capital to come in and invest in those pieces of infrastructure, you should really think about the next 30 years. Don't look down at what is happening right now. As emerging markets, we all feel the tighter monetary policy. We feel the heat of that tight monetary policy. But for longer term projects, I think these are the projects that will present themselves as appealing. There's no slowdown in infrastructure. Captive capital is there, but you need to present the real good opportunities there. So I echo what everyone has been saying around this, and this is what makes it, what gets that wheel turning going forward.
Thank you very much. And do you think that the agility is a key factor here? Can you please tell us why and how?
Well, agility starts with decision culture. Sometimes when you have a decision culture and you bring an investment partnership to the market, when you bring that investment partnership, you should be ready to act. So whatever incubation period it takes for you to get legislation done, to change regulation, this is something that has to happen. And a lot of political support needs to be there, and political will has to be there. I echo the discussion with Solomon earlier also about stock markets. So there are multiple gateways for capital to flow into an economy. The stock markets are one of those, be it equity or fixed income, but predominantly equity. And as sovereign funds, when we look long term, we have to look at equity instruments coming into the markets. You have to have local buy into those instruments. You have to have a local market with depth of participation. Pension funds and insurance companies, they are massive asset managers that all invest in debt instruments. They have to allocate towards equity instruments. If we don't have that skin in the game, why should we expect a foreign investor to come into that market? So I think taking those aggressive but rightful decisions are the things that really matter. So when you bring a fresh perspective to the market and the government responds to your recommendation, this is the kind of agility that our economies need. And with those decision culture and decision capabilities, then you can actually effect change. And this is what we need. Thanks.
Thank you very much. One more question, please. You have just signed the green hydrogen project. Can you tell us more about this project?
Yeah. Gladly. This is our pride and joy. Egypt started a renewable farm. We started the Benban project south of Egypt in the desert, very high solar resource for a renewable solar farm. At the time, it was the largest on the face of the planet. Now, there are other solar farms that have emerged that are bigger, but we've identified a good mainstream renewable source of energy. And that renewable source of energy can now become transformed or can create a pathway towards renewable fuels. Renewable fuels are not a recent find. However, they are becoming mainstream given the decarbonization shift, given the commitment of carriers like shipping fleet managers. A.P. Møller - Maersk, for instance, are one of the largest shipping companies in the world. They had taken an announced commitment to decarbonize a portion of their fleet by 2024. And for their fleet to run, they will need to have access to e-methanol or a green fuel source. That green fuel source, with a pull factor coming in from a giant player like an off-taker like A.P. Møller and the likes, you have technology providers scrambling to try and create scalable offerings. So the mainstream cost of that industry is going to become more competitive over time. So with that forward thinking, we started looking at how can we deliver a thesis that makes sense, and how can we catch that train before it leaves us. We're not missing out on that opportunity. So we started to build a collective of stakeholders within Egypt, and then a collective of stakeholders that are interested to see us deliver that pre-packed offer to them. So we created the downstream manufacturing hub for the electrolyzers, for the e-methanol, for the green hydrogen and the green ammonia. So that's a downstream. And we created also an identifiable pool of up to 70 gigawatts of renewables that will produce a massive amount of tons in production capacity of that green fuel. So on an upstream wind and solar resource. That with one pilot project that's going to actually come live this November in COP, inshallah. So that live project is going to produce the first scalable production of green hydrogen towards a green ammonia production downstream that already exists on the ground. So this is just showcasing that it's doable. There are multiple streams around this in terms of ecosystem of downstream manufacturing, ecosystem around the carbon credits. So you actually need to make sure that the economics work in terms of selling a product that has a carbon credit or a competitive decarbonization value attached to it as well. So that's how we run.
Amazing project. Thank you very much. Mr. Jinjong Chai, can you tell us a few words about GIP?
Yeah. Very happy to be here. I guess I can label myself as a friend of Africa. I have a lot of friends here. And GIP is an asset manager. Our mission is very simple. We raise money from the Sovereign Wealth Fund, mostly from those funds with mission mandate to invest outside of our own country. And we manage the money and invest in various projects. Our name is just infrastructure, right? Very simple verticals, energy, both on the whole chain of power supply, mainly renewable gas. We don't take molecule risk. And transportation, we do airports and ports, and logistics and digital. And also we are doing waste management as well. So we invest globally. Actually, it's, in terms of asset under management, GIP is arguably the largest in the world. It's about $80 billion equity capital. When you consider that's equity, you leverage on, you invest in certain things and leverage up. So all in all, it's one of the major investor in the infrastructure space. We have not done much in Africa, and we will talk more about why is that. And so that's what GIP is. And before GIP, I spent quite a few years in IFC. That's why I've been to the continent many times. Very much looking forward to finding new opportunities on this new platform to do something here.
Thank you very much. And what opportunities rise, in your view, from sustainable investment strategies?
Yeah, I've been thinking about this agility, this word. What does that mean, right? And over the last day or two, I met a lot of friends here. The Sovereign Wealth Fund, in this particular context, actually has quite a different meaning. Agility for Africa-based Sovereign Wealth Fund, actually quite different from Qatar, from Abu Dhabi, from Asia, even Temasek, GIC. Those players, they have excess capital to invest outside, and sometimes directly, sometimes using people like us. But the Sovereign Wealth Fund here in Africa has multiple objectives that would require the team here to have the agility. Basically, you can imagine they are certainly a key enabler to bring mobilizing capital. Actually, when you boil down, it's like a project promoter. And also, as many people have said, they have some capital, but not a lot, right? So in a way, in doing that, there are certain conflicts. How do you deal with that? And that would require agility, because you want to be on the sell side, you want to sell more. But for us, we come in, we look at all the risks, say, this is too risky, we need a higher return. So how to perform, to deliver what people are expecting in this continent using those instruments. In my view, it's great to have those institutions to be able to bridge that gap between what is needed vis-a-vis what the investors' perceptions are, and to help mitigate and manage the risk. This is really, in my view, from my vantage point, I really admire you guys in taking on this task. It's not easy, and how to make this happen at the end of the day is really deliver the result, and to be able to get the infrastructure, get the investment done. And so that's how I see it. In Africa, a lot of people have said that the fundamental problem for a global player is really there's not enough scale. Things are too complicated. And people already talked about you have to compete on a global basis. If someone can invest in, today you can read the news, actually, GIP together with a couple of others going to bid for $21 billion buying tower company in T-Mobile, Deutsche Telekom, and they are looking for some type of return. Vis-a-vis doing a deal very small in Africa, there are just not enough resources to do smaller deals. So the opportunity in Africa, in my view, particularly in attracting big players, is really try to working with the fund here, creating interesting, unique, sizable transactions. I can imagine in many areas, I think most likely this will be in the infrastructure space.
Thank you very much. Monsieur Daouda, je reviens vers vous parce que je sais que vous avez un engagement très important à 18h et vous allez devoir nous quitter. Please, can you give us more background on FGES approach to sustainability?
Thank you, and apologies for having to leave shortly. First of all, FGIS, you have to put FGIS back into the context of the country, right? Because that also defines our approach to sustainability. Gabon is one of the few high forest, low deforestation country in the world. Talking about carbon sink, I believe there's 5 carbon sink in the world, and Gabon is part of them. Today, we absorb 140 million tons of carbon, and we emit 20 million tons of carbon. So we have a net sequestration of 120 million tons of carbon every year. 88% of the country is covered by forest, and we have 13 national parks, which represent 13% of the national territory. So this is the context in which we are. We didn't create it. It was created by our forefathers, and we just have the responsibility to maintain it. Talking about the FGIS now, ESG is really at the core of our decision-making process. And I will illustrate that with 2 ambitions and 1 initiative that we currently are undergoing. The 2 ambitions, the first one is really to capture the value in our timber industry. So going into cross-laminated timber, because you realize that when you look at the sectors that have the highest emission, the built environment is part of it. So the question now is, how can we transition from cement and iron to timber? And we're currently developing the United Nations headquarters in Libreville, which will be a 7-story high building. It will be accommodating 300 plus people, and it will be a fully cross-laminated timber made out of tropical wood built in Gabon. And actually this building, as opposed to a conventional building that will be emitting 1.5 million kilos of CO2 every year, this building will be absorbing 1 million kilos of CO2 every year. So that's a bit the vision, and that's a bit how we think that we can change the model. Because now you have a model whereby you might end up making more money from the carbon that you are creating and monetizing than the actual rent that you'll be making out of the building. So that's one. Second, I will mention here is medicinal plants. We realize that a large part, about 50 to 60, depends on the document you read, but 50 to 60% of the active process in the treatment of cancer are coming from plants that are coming from the tropical forest. So the intention here is, how do we develop the knowledge of that natural capital that we have? And how do we transition from this country that the economy has been based on natural resources, that maybe tomorrow a country that the economy might be based on intellectual property coming out of this? And talking now about initiative, I'll quickly just mention one, which is really how can we set up Gabon as a green growth hub for Africa, based on 3 pillars: the knowledge, like I mentioned, knowledge about cross-laminated timber, knowledge about our medicinal plant. How do you bring faculty down to increase that and that exchange? Second is around assets. How do you create those assets? How do you position the city as a place where a green project can be financed and you can build that ecosystem? And obviously a platform such as ASIF, platforms such as the AFSWF, where we can all come together and tackle those really critical issues with regard to deforestation, climate resilience, and green finance. Thank you.
Thank you very much. Mr. Oji, I have the same question for you. What is Nigeria's and the NSAA's perspective and approach towards sustainability?
Thank you for that question. So, first of all, let me speak to what the NSI is doing. We can speak about Nigeria in general terms. Nigeria started with what they call a Great Green Wall project, which is a reforestation program to stop desert encroachment. You know, when we speak about sustainability, and of course that all goes along with many of the sub-segments, climate change issues, Africa, and I dare say in particular a country like Nigeria, is a big victim of the effect of climate change. And we haven't fully articulated the interconnectivity of climate change issues, restiveness in certain parts of the country, and the general instability of the region. I'll give you a few statistics. Lake Chad in Nigeria used to be the size of about half of Belgium. It has shrunk by 90% in the last 40 years. I have a friend who's currently the National Security Advisor of the country. He told me in 1979, 1980, when he took his fiancée to meet his grandmother, the distance from the grandmother's house to the shores of Lake Chad was 100 meters. Today, it's a 3.5-hour walk. The hut didn't move, eh? The house is still there. It's a 3.5-hour walk from this house now to the shores of Lake Chad. The implication of that is suddenly there isn't enough water to support something like maybe about 12, 13 million people in the area. And so farmers are fighting with headsmen are fighting, and it becomes a subset of a religious war. So when you hear instability, Boko Haram, I can almost tell you that 60% of the challenge is down to climate change effect. So that, I think, is just one premise that I want to put on the table so we understand why we are addressing it. Now, what are we doing at the NSIA? Last year, we created an ESG team for the first time, and this week, we'll be announcing a collaboration with actually a major oil company, I know, international oil company based in the UK, an ESG fund. We are contributing 40% of the fund, they contribute 60% of the fund. And they're going to be doing the following 3 things. It's taken us a year to get here with the company. And we're going to address a number of things. Clean cooking is one, because part of the deforestation is people who live in the rural areas. I'm sorry, this is an Africa-specific problem. They actually cut the wood for cooking. So we need to stop that. Secondly, there is something going on in the oil sector in Nigeria, which is oil flaring, gas flaring, sorry. So, you drill a small well and it's producing maybe 2,000 barrels of crude, but it flares, 50 million scf of gas. It's too small for you to put a whole LNG process, so you just light it up and let it flare. We're investing now in a company called Greenville in Nigeria that's actually developing new technologies to actually capture that gas. And we believe now that we can turn that gas that's been flared into small cylinder LPGs to sell in the local areas. So you do 2 things. You stop flaring, and then you actually stop deforestation. It's a big program within the organization. We've been working at this now for almost 3 years, and like I said, first step is it's already about to be launched. Actually, it should have been announced today, but it'll be announced on Friday. The next thing we're doing is reforestation, active reforestation. There's a project we've been working on for 6 years, and it's quite fascinating how this happened. It's an area of 400,000 hectares in the middle of the rainforest in Nigeria that's just becoming a desert by itself because people cut the trees and then move on. And there's been a plan we've done with a few international agencies. It's quite expensive. This is going to cost us anywhere between $400 million to actually reforest part of it, turn it into a new agro concern. And we've been working on it with, actually, I think at the initial stage, we started working on it with Lafarge, but then that sort of fell away. We found new partners. So reforestation for us is key. But this virtuous circle of stopping gas flaring and stopping the use of firewood is very important for us. Of course, that's going to require all sorts of subsidized programs to make sure people actually stop using firewood and start using small package LPGs. So this is the main thrust of what we're doing in terms of, and of course, there's a whole edit process in trying to get gold standards to be sure that we can actually trade the carbon credits. That's all very interesting and very important. The final thing we're doing is actually ensuring that we are using this now, employing ESG standards in the projects that we're working on. So at the moment, one of our key projects, we have a toll road company. We're actually rebuilding almost about 640 kilometers of toll road and bridge in one of our project portfolio companies. And we've used a coal recycling methodology for the asphalt. Now, what that means is very simple. Today, if you're rebuilding a road, you scratch off the asphalt and throw it away and bring new ones. We're now recycling the existing asphalt, right? Simple, but very important, very effective. It doesn't save you that much money, but it actually is more sustainable. So it is actually on a day-to-day basis, employing these principles in what we do that is going to make the most impact. But we have for once now created, like I said, a team that addresses ESG. And the top 3 projects at the moment is launch this fund, which will be launched at the end of this week. We're hoping, of course, as we demonstrate some projects, in this room, anybody is interested in putting money where we're interested in accepting. But more importantly, it is actually ensuring that we can address both reforestation, gas flare reduction, and these are the things for us that are important in terms of sustainability, particularly addressing the climate change aspect of sustainability.
Thank you very much for those really very concrete examples that really have an impact on populations. It's very interesting. And to do those projects, did you need to use a lot of agility? Is there a link between the concept of agility and sustainability?
Sure. I think, let's not overstretch the concept itself. Again, unlike perhaps FGIS, which reports to on the Office of the Presidency, we have an experiment in the governance of the NSIA, which I'm hoping it's lasted 10 years. Let's hope it lasts the next 10 years. We're actually independent. We have a board. We have a private sector chairman. The government appoints the board, but that's it. The role of the government is in setting up a process run by what they call an executive nomination committee of private sector people to conduct interview to appoint the CEO and then appoint the board. If we need to borrow money, the government has to sign off, but that is it. So the organization is run by itself with private sector members of the board and then an independently hired CEO and management team. Of course, in the first stage, you have to work with government closely, but we have the right to say no. Now, I'm making this point because it is important in understanding the decision-making process of the NSIA, which means we can live or die by our performance only. Now, if you're in a market environment, nobody's going to teach you to be agile. I mean, the markets we're in moves very quickly. But you also have to be relevant. So this fund, if it is not relevant to its local markets, will be shut down. And so as we see environment change, we see opportunities, we'll respond very, very quickly. I get criticized all the time. I mean, somebody said to me once, and I'm going to step away from direct investments and speak about market investments. Somebody says, oh, your fund, yeah, okay, you made some money, but you never made enough because you didn't invest in Bitcoins and Tesla. And I'm like, well, you just watch this space. It's going to be very interesting to see what happens with Bitcoins, which, by the way, for the records, I believe is not really a useful asset class. But I also believe that the technology underlying it is very, very important. The whole blockchain technology underlying it. And I said, look, I used to be a semiconductor analyst. I understand how this works. The reality, though, is, and the reason I'm telling you the story is because we're in an environment where we often get criticized a lot, particularly in our case. And as a consequence, you just have to pay attention. You have to respond, you have to react. And not just react, but you have to stay ahead of the curve. So when we go into things like direct investments, we will execute projects faster than any entity in government. Government at the moment now is saying, okay, can you take over this project and run it? Because we know your procurement process will be up to standard, your process in terms of investing will be very, very quick, and your execution will be very, very good. Now, if you show that track record over time, you take on more and more responsibility, but you cannot have that track record if you're not an agile entity. And for us, the agility of the organization is down to the way the governance works and down to the way the management is measured. If you're measured in a political way, in which case your performance is not important, okay, sure. But if at the end of the day, every quarter I have to send my reports, I have to publish, I have to explain to the press, no one is going to teach you not to be agile.
Thank you very much. Mr. Suleiman, the fund's mandate, your fund's mandate being focused on attracting co-investors, is sustainability a major criteria on which you feel the funds needs to be aligned with the international partners?
That is the currency, 100%. So as a sovereign fund, we have a metric. The metric is how many dollars do we crowd in next to our dollars? How many private investments do we crowd in? We are biased as an organization towards private investors and private sector. Similar to most of the sovereign funds, we are a minority investor by design. We're not a majority investor, so that we crowd in, we don't crowd out. And the currency that works best for investors to come in is actual sustainability and well-governed investment propositions. When you think about scaling up champions, a number of examples that we've done successfully in the banking sector or in private education, K-12, for instance. We build around the success of private management and their ability to deliver decent RRs while delivering good educational services, for instance, in the private K-12 space. But for them to really grow and scale up, they will need to partner with government to have access to land, to have access to buildings, and to have access to all of those parameters that they will need to compete for. For instance, very particular in Egypt, when you're building a school, you're actually competing against you pay the same price of land that you pay for a residential development or a shopping or a hospitality development. So you have to price land and price land and allocation towards education as an economic activity. This is how competitive the landscape needs to be. So for us as a fund, we took a long-term view. We haven't compromised on our IRRs, but we delivered a partnership model that works for the private sector, while making sure that these guys can deliver, they can scale up, they can deliver IRRs, but we're patient enough to get that IRR over a longer period of time. This is how we mix and marry the concept of sustainability, financial acumen, and also crowding in partnerships towards sectors where we know we can create impact and double bottom line. So that's definitely a formula we work with.
Thank you very much. Mr. Chai, how can project developers, project sponsors align their project with the sustainable driven approach to capture international investors such as GIP?
I think there's a convergence, just by listening to the discussions here on the standard ESG, all these things. I don't think there's a big difference. And again, for he talked a lot about the kind of a sustainability is this currency. I would say that's important. At the end of the day, it's return, right? Return is very important, and you do need to have that's a basic requirement. Literally everybody in the asset management business now. Sometimes they are overhyping it, but really ESG meet the commonly recognized standards really is the key, and otherwise it just. People are just not bothered with it.
Thank you very much. Je voudrais vraiment vous remercier pour tous vos insights. C'était très intéressant d'avoir des exemples vraiment concrets, de voir comment réellement sur le terrain, toutes ces questions ont un impact sur le citoyen. Bien évidemment, l'autre enjeu de la durabilité, c'est bien évidemment que ce sont des investissements très lourds et qui vont nécessiter une coopération. Je pense que c'est aussi pour ça que nous sommes ici aujourd'hui, c'est qu'on cherche à développer une véritable coopération entre les différents fonds. Ça ne va pas être facile. Je pense qu'il y a beaucoup de choses à réfléchir, de mécanismes à mettre en place, de critères communs à définir. Et je crois que M. Amran Obeid a dit que vous alliez démarrer ce soir, ce travail. Donc vous démarrez ce soir et je crois que demain vous avez aussi un panel qui est dédié à cette question. Donc je vous remercie encore et vous souhaite une très bonne continuation. Merci à tous.
Thank you. Thank you. Thank you. Thank you very much. Ladies and gentlemen, our first day, actually, of discussions came to its end. We still have, of course, tomorrow morning together, and I would like just to wrap up a few ideas before you can go to the dinner, which is today, just a reminder again. So the main takeaway maybe of today's discussion is that Africa needs to rely on its own development model, and for that the private sector can play an essential role, and we saw it today. Collaboration is also the key, and the initiative that was launched today as the royal message of His Majesty addressed this morning is, and I quote, the expression of Africa's desire to work for its development and seize the opportunities that arise. And to do so, I think that all the key players, and a lot of them are here today, should see challenges as opportunities for the sake of future generations. Thank you so much for being with us for the whole day, and I'll be pleased to meet you again tomorrow morning. And just one final information, the shuttles to go to the dinner are departing from the hotel at 7:30 p.m. and bon appétit. Thank you so much.